Ooh, I think we're live. I think we're live. Paul, was that you wait? Paul, was that you waiting here, or who else was just hanging out in the live stream, waiting for me to go live? I think we're good now, but Paul, I hope that was you. I'm gonna get some stuff out, but yeah, we're listening to the Spaces. Should be a good power hour. Talking some Nvidia earnings coming up tomorrow. Should be a good discussion we have coming on here. So I'm gonna let you guys listen to Mr. Jay Woods for a little bit while I get everything going. Jay's a really smart guy. Works in the New York Stock Exchange, or has for many, many years. So shout out to him. But this is Jay Woods.
4 o'clock during market hours.
I'm going to get the link out and everything.
I don't follow how the courts do these things. It's noon in California, so probably wouldn't come out until after 1 o'clock. So that's one story to keep an eye on.
Welcome to the chat, everyone, by the way. Appreciate you being here.
You didn't hit on Palo Alto Network, so I'll hit on that one for you. This was a stock that had gap lower last earnings significantly.
Welcome.
Started rallying, made about half of it
We got
back.
some moves coming here. I need this Apple higher.
And it was right at a very key resistance level going into earnings. And then what did it do? It gapped down again. But this time, price action is okay. I mean, I'm not in love with the stock over the long term. I think it's still
7 people in here and no one said hi yet. Come on. Oh, there we go, Jim.
Pretty good.
Appreciate you. Apple has been doing well.
Their sales guidance going forward.
Let me get some of this stuff up.
Guidance was solid. It's taken a few of the other cyber names down earlier in the day. I haven't checked back on Net and Zscaler, but those were ones I was watching. Zoom Video also had earnings. Punch up a chart of this one all time if you have the ability to do so. This stock is $60. Has been, it's 58 to 60 if you want to really get technical. Has been the key area of support.
Yeah, I see what he's saying.
Several times.
Oh, we got JG, Mushtaba, Nick, JG. We got a bunch of people in here. Let's go. Let me get this stuff out and then I'll say some hi.
Join up. Really traded below its initial IPO. First trade, the IPO was priced, I think, at 34.
Why isn't this not working?
But, this is a stock that has really gone nowhere. And speaking of stocks that go nowhere, yes, pun intended, Peloton.
That was funny.
Diluted again as they're looking to capital raise. What's it down? I mean, this stock is just looking to tidy themselves up to get bought out. But Peloton down 56 cents to 335. That's 14%. That's pretty vicious. 3 is your major or minor support there. It's I think major support is at 0 at this point. But every time this thing lifts its head, it looks like it wants to be sold. And Zoom, unfortunately, has had that same trajectory over the last year and a half, 2 years. So those are 2 stocks on the radar today. And then you mentioned Nvidia. This is one that, I mean, I focused on it over the weekend, wrote about it, came out Monday. That is honestly why the market is so slow, that we're all waiting on one stock.
We got a bunch of stuff. Paul, welcome. All right, Jim, appreciate you being the first person to say hello. Let's go. Next question. We got from thoughts on Tesla. I'm a Tesla bull. It's been a good day. We'll see. More of a long-term thought process there on Tesla than anything else. But yeah, great company. We'll see. This pay package thing should be really interesting. I can't envision any world where Elon Musk leaves this company, but it would be quite devastating if he did. Tesla gonna keep pumping or gonna dump? That I don't know. I can't tell you short term, but I think long term this is a company that I am a fan of. I want to be a part of, and yeah, Palo Alto almost did a gap fill today. GME went to the moon. GME's been pulling back, right? Where is this gap we're talking about here in Palo Alto? This is 5 minutes. Let's go over to 1 hour. Oh, you're saying this? Yeah, it did almost fill it all. It's rejecting here now. We'll see if it ends up around this half gap level, which I guess is like this. Oh, Bradley Reed, slug here from them hours, baby. But I gotta work. I appreciate you, Mr. Brad. Thank you, sir. We're playing some Fortnite tonight.
Which I know many of you are. I watch for gaps.
Fortnite COD.
Historically had gaps. Going back
Those Apple calls are gonna be looking well.
We've had 2 gaps.
135. The theta decay is kind of killing me a little bit. I took third off on my Apple calls. I sold around. I bought 110, sold at 140, so $30 per con there. Paul, I can't lie. I enjoy Fortnite a little bit more than COD. Warzone. Welcome everyone coming in the chat, by the way. How does the Spaces sound? As he mutes. Pretty good level right here.
had its best quarter on record as far as the fundamental side goes.
Quick water set.
The guidance was epic, and it had already been up, I think, 200% going into it. And in the pre-market, it was trading at 520. It opened at 502.05, traded a
No builds. I kind of enjoy builds, but just the 10-year-olds who do some crazy stuff just ruin it for me. It's tough. So, no builds.
And what did it do?
I'm actually pretty decent at it, though, might I say.
And when the stock is up
Microsoft at all-time highs
239%
here.
over a year and it had a 20% correction, there are big moves, and Nvidia is capable of that. And if we were to have a correction,
no, I think all-time high is like 431.
It would take us to the 750 level, which is what? It's the gap from the last quarter when we gapped higher. We haven't filled that gap, and it's about $6
a little bit
away.
off.
756 was the low on April 19th when the stock sold off. And then from peak to trough, intraday peak to trough, what did we sell off? Was it a 20% correction? So we've already had a 20% correction in the stock this year. So if, they're going to beat, that would be the shock of all shocks. But if something isn't strong enough in the guide,
Brad, I think we just got dissed by Paul. Him saying we love it and his kid loves it too. It's a fun time. But your son is probably part of the reason I can't play the build mode.
Continues to be the biggest growth story out there. Its PE ratio is not in the stratosphere like some of these other big tech stocks where when they were making their moves back in the day.
Does that sound better,
Amazon
Mustaba?
Google was making a move, Microsoft, Apple. So Nvidia, to me, it's all about that gap after the earnings come out and whether
his thing on my end also isn't that clear. So.
And then if we do gap to the upside, the average move in this stock is 8.5%, but the last three gaps have been 16, 24, 14%. I'll give you the exact numbers because I hate being wrong.
Right.
And I have them written.
Let me know how some of the other people sound, though. That's what I want to know.
So
his mic isn't perfect.
They've held them. So when you have significant gaps that can hold, it continues that upward trajectory. So this stock, granted, it's up 90% year to date. It did the same thing last year. It went a little higher, and then it paused. So I'm not going to say what it's going to do. I'm not going to predict what it's going to do. I own it. I put it away. I try not to focus on the minute by minute. But from a trading point of view, from a setup, these are stocks that, as a trader, as someone that was a market maker for years, I would come in flat. I would never trade the earnings, and then I would react to it. And if it gaps higher, I would buy the gap, but stops close, a couple dollars under where it opens, try to protect myself that way. If it trades lower, then there's key areas of support. You got your 50-day moving average. If it's going to hold that, we're talking 885. That's a minor level of support, but your major support comes in around the 100-day moving average, 776, and then down to the gap from last quarter, which is about 750.
Oh, I'd love to see you here from Instagram. I'm trying to get more of the Instagram people in here.
You can play this tomorrow.
Appreciate you joining.
If you're a long-term investor, it's just another day in NVIDIA's long storied history. But if you're trading this, I think there are opportunities to add, to buy it on the cheap if it breaks down, and if you want to trade momentum and it gaps higher, you may be able to get it there too. But I wouldn't. It's at a coin flip area. The risk reward where it's trading right now isn't favorable for someone to just go in and try to play earnings from the long or the short side. It's anyone's guess from here, and that's my Nvidia take.
Hey Jay, I always love having you on these spaces. Unfortunately, I didn't get to ask a question last time, but I wanted to get your thoughts on Snowflake earnings we also have tomorrow.
I was just looking at that one. That used to be one of my favorites. I got to meet the company when they rang the bell, and they were like the greatest people. And then one of the guys was a Philly guy, so I have an what's the word? A strong place in my heart for Philadelphia people, for the Philadelphians. Yes, yeah. Gav, I got to talk to you offline about what's going on at Drexel, by the way. Have you been following that?
I know. I'm following.
Okay. Yeah. My daughter's there, and she's beyond livid right now.
I know. I donated yesterday.
She should be, as you should be, as an alum. How they're handling it is just insane. But I digress. We're not here to talk politics and college protests. Even though I know Gav we definitely want to talk about that. I look at Snowflake. Yeah, a stock that's been stuck in neutral. trending under 200-day moving average. And for those in the audience that have never heard me talk, I look at technicals first. This company, phenomenal. Warren Buffett still. Does Warren Buffett still own stock in Snowflake?
Yes.
Is that
yes.
okay? It's one of the few stocks in the tech sector, right? It may be the only one that he ever bought pre-IPO. I mean, this is rare. We've seen, since June of 2022, it's low. It's tested it slightly higher each time. This is positive. 150 seems to be your technical line in the sand. A gap lower after its February earnings. Unlike Palo Alto Networks, it did not try to even make it back. It could not recapture its 200-day moving average. It did recapture its 50. It's kind of in one of these no man's land. I think the risk-reward setup is more favorable to a bull if you're going to play this. But, this is a company that has not been able to put 2 consecutive quarters together and get that real momentum and follow it like the rest of the market has. The long-term story, I think, is there from a fundamental point of view, but they haven't been able to really get through that sell-off they had in 2022. We got to see this stock get back towards 200 and start filling that gap from the last earnings, which is, this is where people shake their heads at technicians because, I don't want to buy it until it's at 195, 200. Well, if you think that's the case, then why wouldn't you buy it at 162? I get that argument, but I'm looking for something that tells me it's safer and the trend is going to be back in place and be my friend, be that tailwind. So my downside risk isn't as tremendous because the downside risk, if this has another disastrous quarter, we're going to gap below 150, and then your support, we're talking 125. How bad is it? So this is one I would avoid. I'd rather see it above its 200-day moving average before I nibble at it, and then I want to see it try to fill that gap from the last quarter. We haven't seen too many big moves out of earnings. I'll just go through it real quick. Down 18%, up 7%, down 5%, down 16%, down 12%, up 7%, up 23%. This is high risk going into it. So this would be an avoid for me, and wait till you see a little more health. Maybe if it gets back to 150, I would nibble again because it seems to have held. And if it gaps up, okay, good. Maybe this is the beginning of it. If you want to bottom fish for something, I look at Pfizer as a perfect stock, as someone who's looking to bottom fish. Here's a name that's been beaten down for close to 2 years, finally broke a downtrend, has had a consecutive series of higher lows, finally trending above its 50-day moving average. Test the 200, failed, but I think it's giving you an opportunity to buy it on a dip here. The dividend is really nice.
Welcome, chat.
So
welcome.
This is one, given the drugs in the pipeline, a lot of oncology drugs. I was researching this. I may do this on CNBC tomorrow. I'm not sure. I think the risk-reward setup for a longer-term investor, this is where you want to be. It's not going to give you a pop like a snowflake, but it will give you a nice little cuddly dividend and a chance to possibly reverse and break that 200-day on the way up and be there for the next 6 to 24 months.
Appreciate the thoughts as always.
Yeah, I love how I segued Snowflake into Pfizer, just because I didn't want to talk about Snowflake as much, and I like Pfizer, so sorry about that. But that was one I like to talk about stocks that I like from a risk-reward setup, and I think are more favorable to the audience over a much longer-term basis. And I loved how you talked about the meme stocks. Have you guys been following? Is it like, in all seriousness, the one thing that caught my eye was if you look at the volume from 2021 to the volume that happened over the last week, the craze, it was back. Don't get me wrong. It was insane for 2 days, but the volume was not nearly close to what it was. And then the mission statement wasn't there. The short interest was not nearly there. And then the fact that the person running the Rory Kitty account, who knows if it was the same kid, Mr. Gill, never mentioned the stock by name. I think that was very important because if there is some sort of market manipulation, accusations thrown his way or her way, they never mentioned the stock by name, so I don't see how there's a case for it. But have you guys continued? Have you been following the account? Have they been putting up more memes? Have kept trying to pump this thing? What have you seen?
I haven't seen as much since the kind of the early part of last week. Both those stocks, AMC and GME, both did different levels of dilution. AMC was freaking ready to go on the trigger. That first day it was going at the open, boom,
Smart.
shares out there. Yeah, GME waited a little bit, but yeah, no, I've been keeping an eye on it. I haven't looked at Roaring Kitties. Let's look together right now.
And that's how you can tell that this just won't.
In 3 days.
Hasn't posted in 3 days. It's over, guys.
Yeah,
Good try.
It's over. It's over.
The Gurgler. Welcome, Gurg.
Yeah, and
trying to get them
CBC,
YouTube watch hours.
Little story that it may not have been him. Somebody bought the account. I think it was Joe Fahmy because I see him on this call. I just want to give him a shout out. He
Wow,
left.
Joe Fahmy bought the account?
No,
wild,
Joe. Yeah, that's a great way to. He left. Never mind. It doesn't work when he's not here. I wanted to have him jump on. That was something. It looks like they'll probably fizzle back. Although the funny thing about GameStop was it was breaking out before this. Maybe people took big positions knowing that this was coming, and there's your manipulation story. I don't know if that's the case. The stock had been making a nice, slow and steady comeback and had broken above some key levels of resistance ahead of this. So let's see if it can hold here, and maybe this was a good thing for the company on some sort of turnaround story long term. I have no thoughts on it, to be honest with you, but it is fun to watch, and I really hope no one got hurt, because if you got in on that opening on the second day, which was what day was that? That was the 14th, last Tuesday. You got crushed, and hopefully there weren't too many retail investors that were 2 days late to this party and got hurt. But unfortunately, I think there were.
Well, we had
Jay, what do you think?
We had RFK Jr. buying some GME today, so someone's coming out a little late.
That's literally what I was about to ask.
What was that? What were you asking?
I was going to ask your thoughts on presidential candidate RFK Jr. buying $24,000 of GameStop to support the retail rebellion and enact Wall Street reform.
Really, he thinks he's going to get votes by doing that? Maybe the worm in his head has affected his brain. Technically...
Sir, there's the second worm.
Yes, I would use 20 or just under 20 as a stop. That's where it's held the last 3 days. But,
Sorry, Dean.
I don't know what he's trying to prove. That's just silliness. So I don't give any credence to that. I didn't even hear the story. I'm glad I didn't. I'm glad the news where I didn't report. Where did you see that? Was it The Onion, or was it a real?
No, he tweeted.
Source?
He tweeted himself. And there's a picture with it, and it says paid for by the Team Kennedy. So I don't even know if he bought it. I wonder if the donations he got in used that to buy it. But that's speculation. But it's on his Twitter page.
All right, yeah, that's entertainment. That's I hope I know your audience is. We'll play these things. Don't get me wrong, but hopefully everyone had safeguards in place and didn't get too hurt and isn't going on the word of a presidential candidate, any of them. And you mentioned DJT, by the way. That was one of the worst earnings reports I've ever seen. I'm surprised it's not down more. Politics aside, the bottom line was you're not making any money, and your guidance was we're viable for the foreseeable future, quote unquote. That doesn't give me the warm fuzzies. And then here's a question for you guys, because I don't know the answer. I was talking about this internally with somebody.
I'll try and ask about the Moderna for you.
There's a 50-50 chance that he's going to win. Can he use that as his main platform if he is, being paid? Or I don't know how that works. That could be an interesting dilemma, but or it could be a great thing for him. He can monetize the platform, and everyone's going to have to utilize it to get messages from the president of the United States. That would be something interesting.
My guess is he'll do, if he does win, he'll do exactly what he did with his businesses the other time when he became president, which was they became owned by his children or the family company or something like that, so that it wasn't direct to him. Something like that, right? Some workaround.
Yeah, that makes sense. What kid would want it? Maybe Barron. Who knows?
The Giant.
Yeah, Barry, he's huge. He's huge. That was crazy. All right. Anyway, guys, I want to hear you got some great people in the wings. I see. Is that Jeff Hirsch? I see.
Sorry, it looks like we're not going to be able to ask about Moderna.
A pretty face there. That looks like my friend Jeff. Is that Jeff Hirsch?
That is me, my friend. How you doing?
How you?
Good to hear you.
I'm doing. It's good to see you. Hey, I'm going to do a plug for the CMT Association because I got you on the line, Jeff.
Sure.
And anyone who wants to learn more about the CMT Association and that designation, please, reach out to Jeff Hirsch, Tyler Wood. Leave me alone.
I'm a supporter. It's a great organization. I look forward to the next symposium where we can all gather and exchange ideas. It's always
the New York crew. If any of you guys and girls on this are June 11th in the Flatiron District, the exact location to be announced, I think, after Memorial Day. June 11th, we're having a New York get-together and drinks afterwards, and then we have a few more things lined up. Tom Bruni of StockTwits is also, he's one of the New York City
Good afternoon, Mr. Ali. How we doing?
We want to hear from different voices because
that might have sounded really weird, but I just full send,
It's Mark Newton, it's me, it's JC Peretz, it's you, Jeff. There are a lot of young, talented people in this organization, and we want to give them a voice. We want to
listen to the spaces.
What their best ideas are, what
Nvidia earnings. He's a little laggy.
We're going to make a push, so I may plug this a little bit more when it comes to these spaces.
7 out of 10.
All
right.
Take
it. Better than the what's up, brother? What's up, brother?
You want Ralph Acampora back?
I don't know who's ever around because I still get. I don't know if you remember the name.
They're
Al
kind of
Goldman,
digressing down a tangent here.
Retired strategist. I still get his letter, and he just said something pretty cool today, or when it came in over the weekend.
What did he say?
No, he was talking about 3 legs up, and is this the third leg that started? It's just a little technical thing, looking for maybe 5,600 with some support around 5,260. So it was just some other.
I actually, Twitter's can be very random sometimes.
Comments,
I like this
but still, it just made me think that maybe we should tap some of the the history, the old libraries out there.
You know what? A suggestion.
All right.
Voted, and we will see if we can do that. But I don't want to hijack this. You got a great space. Did you guys talk about Mike Wilson by any chance? That was the other thing I'm sure you talked about yesterday.
The contrarian indicator?
Yeah, that's the thing that's got me nervous now. I love that Mike is like super smart. He just had a wrong call.
Oh, let's go, Ollie. You buy anything?
But, did you guys talk about that or no?
A little bit, but always love to hear some more thoughts about it.
No. I just wanted to. I think Gav nailed it. The contrarian indicator. We've seen a lot of bears throwing the towel, and that's the one thing that's got me a little concerned. But we shall see. But my one last thought, then I got to run. Nvidia is interesting also because during this last 6 weeks, the recovery from the 5% correction, if you will, it hasn't been Nvidia, it hasn't been tech really leading. They've been doing all right. Apple's been coming back. Tesla's been coming back. It's been utilities and financials. And financials still look phenomenal, by the way. And this would be interesting to see a rotation back into technology because if Nvidia does raise the bar, there's your next leg up, Jeff Hirsch. Because I think this will be a good 2 to 5% for the S&P 500 over the next 4 weeks with Nvidia leading the way. So that's my last thought. I'm going to go on mute and listen quietly and do some work here in the office before I head down to the floor. But thanks for having me, and I want to hear other people speak. I speak way too much, as I'm told in the chat again and again. So take care.
I know Stock Talk was talking about the Michael Wilson thing, and he was kind of saying that he switched his tone a little bit in January. Stock Talk, what were we talking about with that was yesterday?
No, he, I don't want to say capitulated, but he set his base case as a soft landing in January, which was not his base case last year. So, sort of capitulated, but certainly changed his point of view.
Interesting one to watch. We'll see the Mike Wilson indicator, how it goes, although today's been a decent day, so day one, still strong. Big day tomorrow, though. Wolf, I'll throw it back over to you.
Yeah, Jeff, can I bring you right in? Covering everything that, a little bit off what Jay was talking to.
Are you talking about me? You want me to jump in here, Hirsch?
Yes.
How was your day in the market, team?
I appreciate that. I got to jump in a couple, but,
sometimes you'll hear, the inner singing come out of me.
I just put out a note to subscribers that,
I try not to.
my base case scenario is pretty much locked in for 8 to 15% in 24. This is just like the S&P broad market stuff. But the best case scenario is really coming into play. You know, we had that 5-month run and the little 5% correction that we were looking for. And here we are. Everyone's all selling May's not working. But, you know, this is an election year. We got a sitting president running. I've said this before. We are just pushing the upper end of my outlook, my forecast, and I think we could easily get to that, you know, 5,600 level or more, looking for 15 to 25% yearly gains for you know, S&P, maybe more for NASDAQ, maybe a little bit less for Dow, but
I think you'll easily have
things are still working. I mean, we're in our caution
We'll see.
period. We're starting to, you know, tighten up a little bit. I'm looking at getting out of some things.
I don't know how much I'm going to pump it out, Ollie.
Our best 8 months for NASDAQ ends.
I'm going to mute this for a second. My real goal is to get the people from the Instagram over here. Because the Twitter people, they can just listen to the space that they want, but the Instagram people don't have that stuff. So that is kind of what I'm hoping for. So I'll push it hard over there tomorrow.
With everything pretty much around 0.3 month over month for us to get out of this range, and the Fed
Let's get this
not being able to cut anytime until September, maybe even later, which could be a disappointment. So we took some more profits on Supermicro. Still have a partial position.
He's lagging
there.
for me.
Couple of our stocks that are doing well, benefiting off the AI, you know, sort of picks and shovels, tertiary, you know, action there is MCore and
the channels, Electric. Brad. You don't count that, Brad.
Stocks are still kicking, so are the natural gas. But as Jay was saying,
for anyone who doesn't know, I actually know Brad in real life, so that's why I talk to him like that. But yeah, Instagram's the goal to get the people over. They don't have anything like Spaces.
Into the summer, so I would speak longer, but I got to jump. I got somewhere I got to get, so I'm going to hand it off unless you got a quick question. I'd be happy to respond.
Most amount of live concurrent listeners. Let me take a look.
Thank you, gentlemen, and everybody. Do well.
Thank you. All right, we've been talking a lot about these individual stocks. Kevin, you want to talk to us about some of the macro pieces in play here?
Yeah, I would say it's kind of like a little bit
31
of a light week.
there.
I think we have some Fed speakers. We had a little bit of volatility after some Fed commentary earlier, but we were able to recover. I mean,
67
for this week,
for
the most part, it's not that much. I mean, we have a revision for University.
For Apple live earnings, I had 67 people.
You know, that could be a positive if we see a revision to the upside here.
Brad, on Instagram, that should send you a push notification in the group you're in, and then on YouTube, if you hit the bell button, it sends you a notification on here. 67 for Apple earnings was a big one. Peaked out, didn't get that many for that one. Palantir live earnings, I peaked out at 43 concurrent.
That didn't see that much love, and I wrote a piece about utilities this morning, and I won't go through the whole thing. I'll post it in the comments, but
Warren Buffett portfolio update, 21. So it seems like 60 is going to be the peak that I've had so far.
Spike up, energy demand and all this stuff, which is for the most part going to be true. But when you're looking at the industry experts and their projections up until 2030, which is 6 years from now,
I'll get us to 70, 80 tomorrow. I have some high expectations. I think I might go live all day tomorrow.
When you're looking at the grand scheme of things, it's really not going to be much, 0.3% of the total capacity that we're just adding on just this year alone.
I don't have much.
The big factor is going to be where these data centers are going to be held,
I
and where the
see
training
the
is going to be
pop-up
held,
in the
right? So if you're looking at
person don't have push notifications on Instagram enabled, so I don't know. Interesting.
Like Texas, Southern California, things of that nature, then that's where we would see a major strain on the overall power grid. Now, Texas is kind of disconnected from the national power grid, but that's here.
Shout out William Schumacher. He's come in the chat and said hello before.
I think when you're trying to pick out utility companies on the AI play and you're making a longer term play for this as a part of the picks and shovels type of portfolio, I would definitely focus on the companies that are going to be within the regions that data centers are being put up.
All right, Chad, I'll be back in a second. Leave you with Kevin in the spaces.
In the popular areas like we've seen in the past, right?
Hey, Minx just posted something about a uptick rule for GME. Is that real?
Iowa, I think they actually are building out a significant one in Iowa. some of these smaller towns that do actually have the infrastructure in place in order to do
Iron
so.
mix?
So wrote that to kind of like demystify some of the narrative
What's her at?
around utilities, because I think utilities are catching bid because they do have
IMJ
pricing power,
mix?
they do have expanding margins,
Oh.
and they do have yields going to the downside, which makes the
LOL,
dividend a little bit attractive. And then they
GME
had a technical
uptick rule.
oversold level, which they were able to overcome. Now, I think the move has
SEC's
been
uptick rule has
maybe
been triggered
too fast. Still optimistic about utilities, but I would be
maybe.
a little bit more
I don't know. I've
cautious.
never seen that before. Do you
71
think
to
AMD reacts
71.50
hard
was
off
kind of
Nvidia earnings
my
tomorrow?
top area that I was looking for when you're looking at the XLU. So that's the utility play. It continues to run. But just be mindful of that. I would say the same thing when it comes
Greg,
to
I'm taking a guess here. So it is obviously very associated. My guess is there will not be a crazy significant move on AMD. And like I said, guessing, I'm not putting money behind this, but I think the focus for Nvidia is competition coming and what they're going to do about it. But we're still in the point where the competition is not yet there. So I don't see much of what Nvidia is going to say tomorrow that shifts the dynamic of the competitive environment where AMD is playing catch up and they're still not out yet. So I will tell you, I don't think we get a massive move off of Nvidia's earnings for AMD. Like if Nvidia is down 10%, I think AMD might be down 3, 4, 5%. Like that's just what's gonna happen that first day. Or opposite, I just don't see a sustainable move off of this for AMD. And my thinking behind that is that we are still waiting for their products to start to scale up and to get to the point where they're actually competing for market share. And I just don't think we're there yet. I don't think the market will take anything really out of what we get here. A lot of companies seeing new 52-week highs, banks. Interesting. But yeah, that's my general thoughts there. Let me get Kevin back up here. Now I am actually going to go and be right back.
$2.97, I think.
Chat, you kept me here with the questions.
Maybe $3. And then, once again, we have some headwinds because we're in injection season. Now, there's a lot of players in the space that are reducing CapEx spend, so rigs are getting taken offline. That is going to synthetically reduce supply in a sense, but I don't think it's going to be aggressive enough for us to be able to sustain prices at these levels, barring any type of geopolitical event. There's news about the Biden administration releasing, 1 million barrels of gasoline, if I'm not mistaken. Pretty much by like 4th of July, they're going to do it in 100,000 barrel increments. They're going to have competitive bidding for it. I know there's a lot of political commentary around it. Just one thing to note, there was a bill that was signed into law, right, that wanted to reduce or basically end the Northeast SPR facility that is up there. And so there's a political angle that they're kind of spinning it, but there's also legislation that actually did go through Congress that has this as a priority, I believe, up for the next 10 years. They're trying to reduce those resources. So that's kind of where they're going to be getting that from. Grand scheme of things, it's not a lot. So I think it's more symbolic than anything. I think it's around, 11% of motor gasoline supplied daily, right? And that's actually the total value. So grand scheme of things, it's not going to impact prices at all, in my opinion. And I think, longer term, we're still kind of in this phase where we're trying to figure out what's happening with gasoline demand here in the United States. And then are we going to see an increase in export demand? And are we going to continue to see refining rates at these levels? The rejection at $80 to me was
AMD's number one competitor to
Nvidia.
Okay.
For the most part, we see individuals coming in and selling it off. I'm more in the camp for right now that speculators are offsides, and we will see a second win when it comes to oil. That's
AMD is the number one
thesis
competitor
right
to
now.
Nvidia, yeah, but they're not even there yet.
Saying,
It's kind of crazy how far
I'm a little
behind they are.
concerned about heating oil
We'll see.
being below the 200-week moving average based on past correlations with that economic activity and the S&P 500, but we don't have enough data yet to really confirm if we are going to see an economic pullback. So that's kind of where I'm at with the energy space. I think silver's still overdone, but it's going to continue to do its thing. I'd like to see a retest of 25.50 for silver. It's not as scarce as some of these other metals that are moving to the upside. And so I think that's kind of just being driven by speculative money flows. Copper is a whole other scenario where we are seeing, a shortage in demand or in supply, but we are supposed to see some supply coming online in June, and then we had Southern Copper make some comments this morning around increasing their mining production, and I believe Peru by 20% this year alone. So they're kind of doubling down and trying to meet that demand out there. So I think we're kind of at the, I don't want to say that we're at the top, because copper typically triple tops before it actually pulls back, and it can take a long time, like 6 months, 8 months. But I think we will be near peak, just kind of based on that price action, and spreads from the LME and CME are starting to tighten out, and that looks decent. And that's kind of where I'm at with these markets. So yeah, but from a macro standpoint, it's not really much. FOMC minutes are not going to shock the market. I mean, the Fed commentary is already too much, and they just started talking last
Chat,
week. So,
I just got a cool DM. Cool DM
of substance from any of these members, and I don't expect that we will anytime soon.
Boom. There you go, folks. Caught up on the macro side of things. I know it was a little bit light, but I feel like you made the most of it. So always good stuff there. While you were talking, Mike Larson requested up. Mike, did you have a comment on what Kevin was speaking to there?
Yeah, I just want to jump in real quick. Listening to Kevin's commentary was great to hear him touch on so many different things. And I think there's a message in that he did touch on so many different things. If we had this space, I don't know, however many months ago or a few quarters back, it'd be all tech, and more tech. And that's
cool
all you
DM.
talk about. This is a market that's
cool DM alert.
Broadening out. It's a market where more sectors.
No, Elon's not DMing me.
It's a market where it's not just, everybody used to complain, it's just the Mag 7, and if you don't own the 7 names, you're not making any money. He's touching on energy, he's touching on metals. You're looking at the year-to-date sort of performance, and for crying out loud, we're talking about utilities too. So you've got a lot of ways to win in this market. I think
it is a large public company with a cult following, possibly inviting me to one of their future events they have. Maybe a little. Gotta work the angle a little bit, but you might see me at an event coming forward.
But in general, as a bull, if you're bullish, and I have been since the beginning of 2023 on this market, I've been kind of calling it the be bold market versus the be boring one that we had beforehand. And it just,
I promise you, Ollie, I wouldn't be able to contain myself if
you're
it's
bullish
Jensen.
as an investor, maybe not as a very short-term
Cool
trader,
times.
but as an investor, this is a
It's not like it's a
take,
secret or anything, but I subscribe to the model. The more you talk about something that you're excited about and hyping it into it, a lot of times it doesn't happen. So I'm just gonna keep it silent. Cool DM. Too early for anything.
Good stuff, guys. Jason, you want to jump into the mix here?
Some more commodity talking coming.
Looking at sector-wise commodities.
Yeah, hey guys, thanks for having me on. Sorry if I'm a little bit off today. I had a long flight last night.
Ollie, the face reveal will come at some point. I don't know when, but I just
this morning, so
enjoy being private.
Kevin for putting that together.
So
with
we'll
me
see.
Today. But yeah, just as we're looking at the market, for me, it's the same thing we've kind of continued to talk about all year long.
Start running.
The one thing I wanted to say too is if you got my signal that I put on here at the beginning of the month, which was the false breakdown signal on Bitcoin, but we did close out that trade today just as a short-term trade. Our systems are still primarily long Bitcoin on all of our models. We have two different long-term models. One's a little bit more short-term than the other. That the little bit more short-term is the futures model. The ETF and normal spot Bitcoin model is still just fully long too. So both those models are still long. Not saying we're turning to any more downside.
I'm a very average-looking dude, Ollie. Very average-looking dude.
Trade, it was a range trade idea.
What was I gonna look up?
Trying to trade back from 60,000 on the top of that trade.
I'm a little chubby right now. I can't lie.
We hit the top of the range, so that
a little chubby.
Closed.
Need to lose some weight. Drop the LBs.
So if you did listen to me, just managing that one for everybody. But as we're looking at the markets, we continue to see very similar things. And I like what Kevin mentioned today. He also mentioned that earlier today as well, which is utilities isn't always this bearish thing for the market. A lot of the time,
this was an interesting quote from Dan yesterday. I'm trying to get him on for the spaces,
so that also
we'll see.
Thing. And just thinking of utilities being one of the most beaten down sectors, finally catching up a little bit and catching a bid. That's also a reason to think that maybe it's just a sign to me that the market's broadening out a little bit more. We've just seen such concentrated movement in the market, and everybody's all about tech or semiconductors or Nvidia, and now we're getting back into the meme stock thing. And when things like that happen, you get this very concentrated market.
That's someone just liked the stream. Shout out to whoever that was.
I see the market as
I saw that number tick up from 5 to 6.
Look at I have breadth models. One of the breadth models I use is as a
forward piece, in fact, 15% below. Jim.
Positions and percentages over 200-day moving averages and 50-day moving averages, and the NYSE, so the New York Stock Exchange, so a very broad index. And that's all in bullish territory. So the market is still fully bullish. We talked about this before. I know myself, Logical, others, we were very bullish during this pullback, just kind of not really thinking that we were going to get this pullback and it was going to be the end of the bull market and so on. I think the market is structurally bullish, and most of the time when you're in this structurally bullish market, you just want to continue to ride the trends and sit on your hands, because there's no real really.
This is the reason really too. You see this little follows you thing, Ollie?
A trend will end.
This was a cool moment.
Once again,
I am a Mr. Beast guy. I don't live by him.
Breath, you can see this.
Yeah, he follows me, which is one of the cooler people that follows me on here. That's why this is still up.
Because if you look at people and they talk about technical analysis and they go, technical analysis is stupid. It's this and support lines and Fibonacci's and
it is what it is.
Waves and all these things, and it's like,
no, that was one of the cooler people that followed me. I can't lie.
About price action, and that's the trends. The trends tell you a lot. They can tell you what the fundamentals will believe to be going forward. Most of the time, a trending market continues to trend. So really, as we're kind of looking at the trends and them continuing to the upside in a lot of these sectors,
it happened recently, Ollie, like last week.
Want to just be participants in those.
It was off of.
And even the commodities, we're looking at the commodities markets, looking at copper.
You can follow it off of this tweet.
Bitcoin being another one. These trends are amazing here. So it's really not something that you want to fade. Some of them are a little bit overbought and into major kind of resistance zones, or just starting to break out a little bit, and that could pull back and be bad, like copper. But really, the trends are strong and the trends are up, and pullbacks will probably continue to get bought. As long as the environment stays like
KSI Crypto following the accounts as well. I thought this one was pretty exciting as well.
We start to see breadth going the other direction. Another thing, to just talk about, we had silver and gold kind of pull back a bit today. But both of those ended up turning back to the upside quite a bit. They're not quite flat yet, but they're getting almost.
Anyone big Pat McAfee fans? I'm a big Pat McAfee
structurally bullish. In a bull market, when you see
not that many people make me go like, oh damn, that person's following me. That's sick. But these are 3 of them for sure. And Dan Niles too. That was a cool moment. These 4.
That's usually a very good sign of more upside to go. We've also been long coffee for a while. It's a long-term trade for us. We see these pullbacks. Got a pretty deep pullback pretty recently, but it's starting to move up nicely and quickly. And that market is really set up in a very bullish way. We have, great fundamentals. We have not really bad weather, but great weather for coffee if you're a buyer of the product. So we could see more upside in coffee too here. Orange juice as well. Orange juice has a very bullish outlook as well. So orange juice also continues to move the upside. It came right out of a very tight squeeze pattern and then moved up very strong. So orange juice, another one that continues to move higher. We talked about earlier on our channel today, which was sugar. Everybody keeps asking about sugar, but really it's in a hard downtrend. Yes, I know a lot of the other commodities are moving, but commodities aren't something you look at and go, hey, it's a catch-up trade. Let's buy sugar because it's cheap. Most of the time, commodities trend, and they trend hard. So when they're trending down, they'll continue to trend down. When they're trending up, they'll continue to trend up. So you really don't want to buy dips in commodities or buy big bear markets. And
9 minutes till close. No yawns, Evan. Come on.
Most of the time, that's not exactly what's going to happen in the commodities market. So you really want to buy those very tight squeeze patterns, like a Bollinger Band squeeze, flag pattern, a nice base breakout. Those are very profitable patterns if you back test them in the commodities market. But really, across the board, we're seeing a lot of interesting things.
I've never had Feastables. Maybe I should.
Wheat is one of the.
Ollie, do you like the chocolate?
Political risk, most people go, well, oil is a great one to buy when there's political risk. Really, wheat is actually historically one of the best things to buy when there's major political risk. Not saying that there's a ton of that right now or right this second, but at the moment, globally, there are lots of problems with controlling the wheat supply and how we're going to get the wheat supply out there. Also looking at Russia. Russia is very correlated to Chicago wheat. So both of those continuing to move higher here. So, we still like wheat. We like copper. We absolutely like gold, silver. Platinum actually is another one that's looking good. So the commodities market, we're pretty long across the board.
Yeah.
It's something we don't see much.
Let's try
We're
it.
not very long.
Dark chocolate sucks.
To this level a lot. So kind of seeing that, possibly saying there's
dark chocolate is not worth the calories.
A lot of these, or maybe it's kind of just a move.
Like I said, I'm chunky right now, so every calorie counts.
A bunch of squeeze trades. There's a lot of unwinding trades, like natural gas being an unwinding trade. We're still long natural gas, but that's kind of a short squeeze unwinding, and then now positioning has gotten kind of skewed to the other way. So I don't know how sustainable this move is. Kevin could also speak to that a little bit more if he wants, or if anybody wants to know more about natural gas. But once again, we're kind of just bullish across the board on a lot of things, especially equities at the moment. And other than that, Bitcoin's also looking good, and we're going to just continue to ride the trends till the end.
Chat, you guys Bitcoin, right, you guys Bitcoin Ethereum people?
Oh, it was a pleasure.
Crypto team?
Appreciate you being up here and sharing the wisdom. I want to kick it over to Logical here. Logical, share whatever thoughts you have, and then I also saw you wrote a piece for the street on Mara, if you have any thoughts there.
Yeah, I can cover that too, for sure. Yeah, I've been on these spaces for some time now, and I have been bullish. I continue to be bullish. It's hard to get bearish when we're at all-time highs, and I think in the words of Stock Talk, it's now on the bears to prove otherwise. So yeah, I agree with Jason too. Trend is your friend. I'm sure Brett would say the same if he was in here. But yeah, it's just been pretty good. I like that crypto is finally waking up after a 2-3 month consolidation period. We're seeing gaps higher. You know me, I've been pretty active in the Coinbase trade. I've been trading around that position quite a lot. It's been going pretty well. I think those results are amazing from that first quarter, and I think that we're nowhere near the peak of the cycle. And then, now we're kind of ramping. Crypto's waking up on this potential rumor of the Ethereum ETF approval.
Fair enough.
So, whether that is happening
I enjoy me some Bitcoin and Ethereum, but I definitely do not get down in the weeds with some of the craziness.
So yeah, it should be interesting. I'm noticing a lot of my crypto
Max, I appreciate you saying hi in the chat, by the way, too.
Just trying to
thank you for being here.
Trade some of these calls on a reversal higher for coin and trying to move that into shares over time and just try to ride it for the cycle. As for the article today about Mara,
I'm gonna hear some background noise right now. Sorry.
Look, I think in a crypto cycle on the upcycle, you're gonna see upside in almost anything crypto related. That includes the miners, because clearly, if Bitcoin's price is going up, then it's kind of like
I'm probably close to 10% in crypto, but 95% of that is Bitcoin and Ethereum.
But there's the cyclical aspect of crypto markets. So
Spy was a nice move here in the last hour.
Becoming a much better operating business under the hood. They're
Apple
able
pulling
to
back. Stop it.
Speed up. They're mining more.
Go up.
All these things which are very good, but we just had the halving. So, that's good and bad for them. Bad because clearly, they get half as much Bitcoin. Good because smaller players are going to continue to get consolidated out of the space because, again, they get half as much Bitcoin for the same amount of work.
Tesla?
So, it should help big players like Mara.
Clearly, the chat does not want Ethereum up there.
Kind of look under the hood of the recent
keep it
results,
going. Just keep going.
They had more net income than their...
Where are we at in the day now?
Than their revenue. And anytime that happens, it's typically some sort of one-time thing, or and in this case,
it's a good day for Tesla.
Rule for gains of digital asset fair value over the quarter.
Come on, Tessie.
Obviously, Bitcoin was up quite a bit.
Give me a 187 finish, Tesla. Can you do it? Apple, let's pump a little too.
But really, the operating business lost.
My call strike for Apple is 192.50. So, if I can get a Mikey in the money, would be nice before the end of the day.
Much increased volumes in that first quarter of trading.
Stop going down.
Still an unprofitable business, and again, obviously these names can still do well for the cycle because as Bitcoin prices go up, they become more and more profitable. But structurally, the underlying business is unprofitable. So those are my thoughts there. I just think that, when you look at a business like Coinbase in comparison,
Any thoughts on?
we'll have
No,
an article
I
on that
that's so out of my wheelhouse. I know Buffett's a fan of those Canadian
the
companies,
operating
so
business
that's
actually
good enough for me.
saw
But yeah, no, I got nothing for you on Canadian
net
Pacific.
income over quarter. So like
Sorry,
their revenues
buddy.
were up 72%
Sorry,
quarter
sir.
over quarter, and their net income from the business was up immensely.
I mean, looks pretty
by
good.
Like 60% or something.
Good chart here. Broke above it. It's trying to retest this kind of key level around here.
I forget the exact numbers because I forgot to
Let's go to 1 week.
adjustment. But so the business is a lot more structurally profitable to own something like a Coinbase than a miner in my fundamental
Yeah, Ali,
view.
I really can't
So
do
I think
what
that they're
Mikey
gonna
does,
continue to do
but
well, especially as
it's pretty
retail
cool.
trading
Yeah, it seems like we're at a
volumes
pretty
are still at a third
significant
of what they
level
were
in
in
this Canadian
2021
Pacific.
peak.
You'd want to see it
Again,
hold
they
here
charge 1.5% per transaction. So I think
to kind of confirm a breakout of this range here, and that would be nice. So I could see on the short term if you want to take this for a trade of like what levels we're kind of at here, and maybe if you want to say it's going to hold here and retest higher, I do see that here, but. Yeah, I can't implement much. And we're on the 1 week time frame right now too, so that means this would be a pretty strong trend.
Future bear markets, we probably will see a higher low than we've
5 minute. Let's get Nvidia back over
so that should be
here.
interesting.
That is an interesting looking chart though. It doesn't look bad, Nick.
I'll move on from crypto because that's definitely not all I talk about or think about. A few names that I've been kind of looking at recently.
2 minutes till the market closes, team. 2 minutes.
Again, besides trading around Coinbase, I've picked up a few names that have been
Earnings
in really big drawdowns. One of them, I've kind of spoken to Jason about this before. Since Coco is now collapsing, I've re-entered my position in Hershey. I think that should be a
easy earnings coming up after close. Nothing really.
Right now, projecting zero growth, but as costs come down into 2025, should be a good tailwind for them. And the company's trading pretty cheap for the quality. So I'm looking for that as a re-rate play. Another big one, which should maybe be affected by these alpha earnings coming out, is Volta,
nice moving
which is
to
trading
close.
at lowest multiple it ever has, essentially. And they saw a huge buyback in place. They're taking out
Nvidia with a nice move in the close as well on this 5 minute candle.
So it's just a cash machine, even though they're showing some slow growth. But right now, I find a ton of opportunities in high quality names that are in 30-40% declines, which just seems silly to me. And, I think they're going to end up being just fine. The market is a very good bullish backdrop right now. So I think buying dips will be rewarded, especially in quality names. So
Apple a little dump down here last candle. Come on.
I increased my position in Shift 4, which I think, it's very cheap for those quality of earnings and growth. I added to two of my existing positions recently, which is Nubank, which after they reported earnings last week, their multiple got even cheaper, and it's trading around like 18 or 19 times
closing
next,
coming.
12-month
Gotta be
earnings.
a couple seconds
so it's
only.
a very cheap company from a growth perspective. They're going to continue to get into new verticals and increase their total addressable market. I think they're getting into telecom, which doesn't sound great.
Apple getting bought back up a little bit in this last minute candle here. Yeah, it's a nice looking test chart. And ding, 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 market is closed. Good day, team.
That Mercado Libre is going for a banking
Let's get this back
charter,
open.
which
Autodesk acquires Wonder Dynamics.
So I don't know if there's some competition there for Nubank, but yeah, I mean they're also spreading their legs and going to other places, so that's cool. Another very impressive earnings report last week was Despegar.com.
Terms.
I think I was talking about it as they were reporting on the Spaces last week, but man, those numbers were insanely good. I bought the after hours pump, and it ended up going much higher the day after, because when you read those FX neutral numbers, like essentially how their revenue and bookings look, because they're like a booking.com in South America. When you looked at those results, excluding the effects that foreign exchange had on the reported revenues, it is just a very strong growth result. So I gotta imagine, and my portfolio is definitely positioned for it. I have 40% of my portfolio in ex-US stocks. I gotta think that as the dollar declines in strength over I guess the next couple of years probably, I'd imagine that is a tailwind for international holdings as well, who have kind of been suffering from this foreign exchange.
Tesla charge actually crazy. GG. Good day, team.
I'm feeling good. I have been
feeling good.
Like I should. Positions as I see coming, and still.
We'll get a little Tesla end of day tweet.
Yet, but I'm I'm looking to add opportunistically and just kind of trade around core positions and stuff like that.
By the way, Autodesk had a little bit of news here. They announced an acquisition. Terms of the deal weren't disclosed, but it was kind of like a VFX AI type one. ADSK is no movement. Yeah, no movement in after hours. But that ADSK just announced a small acquisition. Not too many earnings coming up after the close here. Wolf, I'll throw it over to you because it sounded like you had a question. But Toll Brothers, a home builder, Urban Outfitters, like maybe some things we'll mention, but nothing super close today. I just want to get that in there. Wolf, sorry. Sound like you were going to say something.
No, I was just going to bring it over to Shy.
Mr. Shy, how are we doing today, sir? Autodesk, is that a name that you are familiar with?
I am. Essentially, if you guys know Autodesk, they're leading the CAD software in space. I like them. My only issue, like, they have a massive market share within their niche software industry niche. Like, I think I want to say it's like 60%. Issue with Autodesk has always been for me is growth. They just have been a mid-teens growth for like since 2020, and I think now going forward it's this high single-digit percentages, and that's fine because they print cash. They're an absolute cash printing machine, like mid 20% free cash flow margins.
GG, good day, team.
Net income.
GG's in the chat. Everyone put a GG in the chat if you had a good day today.
Don't quote me if I'm wrong.
GG's in the chat.
At that scale of an investment, they're at the maturity side of it, and
as a
growth investor, that's just now where I want to be exposed to. But if you're looking for names that have a high floor in a software space, then again, maybe Autodesk starts getting into AI. And
I don't know what these are. What the hell are these?
Who knows? That might be interesting, but they're
Do
just
you
a
guys
value
see
play.
them
They're printing
too?
cash. I think they're
Paul, Nick, joining in. What's up? Let's go. Yeah, you guys see them too. That's so weird.
Kind of expensive for high teens growth, but
scroll too
end
tall.
of the day, they're printing cash, so
reload.
It's good company.
I get scared when the shit reloads, by the way. Autodesk just cut all their third-party resellers, so they're looking to sell direct to customer, controlling those sales even better. Interesting.
No, that was in November 2024. 24th was the lowest. But yeah, today closed off the lowest volume of the year. Not surprising. I think everyone's waiting for tomorrow.
Dan, thanks for that insights. I did not know that.
Major catalyst. I am shocked on Tesla. Where the F did that come from? And it was with volume too. Like today, look at that daily candle on Tesla. That is absolutely gorgeous. I have no idea where that came from.
That is a pretty hot candle right there. Little wick.
I'm a little shocked. They're up 7% today on above average volume. Could this be because Tesla's calling all shareholders to vote that haven't voted? Maybe. Or maybe there's some kind of 10,000-foot view that the voting is actually going to be heavily in favor of one side and is essentially going to be a nothing burger. Who knows? All I know is that their chart looks near-term bullish now. They really desperately need to clear
earnings. Does anyone care?
Past like the 200-day, which is like
figure this out, but we'll get that
215. So like, there's still ways to go. Like, oh, love this to clear 200.
I don't think it's the order, Paul. I don't think the market really cares about the Tesla semi-truck.
Nice points in my growth portfolio. I mean, the rest is just they've been on standby for quite some time.
This is what he's talking about.
For weeks, honestly, since the major
Pepsi last week started taking delivery of an additional 50 Sawyer's a great Tesla news source when you guys don't follow him.
Hours away from that.
Yeah, this. Pepsi announced they've taken delivery of more Tesla semi-trucks.
Nvidia is less about them, but more about AI.
So that's interesting. We'll see.
And that's why
I don't think the market thinks the Tesla semi-truck will ever be anything.
Probably won't move more than 5%. I know they're priced 8%, their volatility, up or down tomorrow. I think they might be somewhere than a couple percentage points. So like selling calls or puts are probably the move on tomorrow's print. But I think it's just more of an impact for everything else, like the growth sector. And also Snow's reporting tomorrow. And we could gain a lot more positive notes with Snowflake the past couple of days.
Snow.
But you're also, it's like positive notes with a twist of...
For the record, guys, when I try to sing, I'm fairly certain I'm tone deaf. So I know I sound terrible and I apologize. And I'm not going to stop saying sorry for it because I do feel bad. I'm also not going to stop doing it because it just happens. Good talk, team. Back to the spaces.
So that's gonna be really interesting for me. I know I made a comment last week that I'm not adding anything till Nvidia reports, but I just couldn't help myself today, and I added some Jumia. This is a name I'm overweight in, and I added it when it was down 12% out of nowhere. I have no idea why. I just think the stock is going to be like $20+ in the next year or so. A lot of people are like, first off, it's not covered at all from any analyst. Like, whenever anyone looks up a stock and it's not covered by any analyst, that's essentially, all right, it's a no-go. It's too spec, or there's a reason nobody's covering it, it's sketchy. Whatever the reason might be, it's not that case. I really think it's because this most recent print showed a radically different version of a company that it's been the past couple of years, where it was all about growth in a really sketchy area, Africa, that they're going to be the Amazon of Africa, and they blew up. Like, they're probably, I think it went for $80 at one point. That's not and they're suffering the past couple of years, but that's not the same company anymore. This most recent print from 2 weeks ago, like,
do we know when Tesla
next Tesla
delivery numbers?
That was known to be a mythical metric for Jumia, but they delivered that using without currency headwinds. Like, they grew 57% revenue, their gross profit grew 67%, while reducing their
looks like around July 2nd
advertising expenses by close to 40%, and
July
they also
2nd,
saw
Paul.
a rise in orders per customer, repurchase
around
rates.
then,
like,
give or take.
This is a stock that's just like totally under the radar, and whenever it breaks below 6, I have to add, because I have that conviction. I've done the work
early
for
July,
almost a year, following this company,
month and a half,
quarter after quarter, reading through a lot of the reports. Like, I know what company it is and why it's not priced accurately. So I'm going to add, and I added to that name. So that's the name I added. I want to add in the coming days. Like, I want to add Snowflake at this range. I want that confirmation earnings. Like, I think I would love it if anyone has that on the back of their hand. I don't know what the implied move is on Snowflake. I'm anticipating 12% is my guess, but regardless of that, like, it's going to move a ton tomorrow. So I held back on that. If Nvidia gives me the green light, which I believe it's going to be after seeing all the big tech CapEx spend and also TSM doubling their capacity, like, I think they're going to deliver tomorrow. If they confirm that,
EPS miss,
I think it's blue
revenue
skies ahead
beat,
for quite
probably
some
a
time.
down,
And that
I
gives
guess.
me the green light to empty my cash and, like, go all out of my buying power.
Yeah, big leg down.
And I'm going to add to Snowflake. I'm going to add to Global E. I'm going to add to DigitalOcean. I would love to add to Trade Desk closer to $80. And then I want to add more to Axon, which I initiated a position. AMD initiated a position. Like, I have my list I want to add. I'm just waiting for the go-ahead signal from Papa Nvidia. And once he gives it to me, I'm going to be going hard on my buying power. Again, we're going to have no volume in the markets for quite some time.
Dude, Tesla's over 187
after hours.
Without
any volume, because there's going to be no follow-through or confirmation of any kind of major move. And knowing that, I'm just going to scoop up shares of stocks I think are on fire sales right now. Besides that, Robinhood made an interesting move today. I don't think anyone's commented on it yet.
What did Robinhood do today?
Their margin interest rate, they went down to 5.5 or 6% from previously 8%. That's a major move. Like, they're just making some big baller moves, Robinhood, to create this unified brokerage.
Jeez, Robinhood.
Damn. And they're probably going to be losing money in the near term for a lot of their initiatives they're doing, but I think it's okay because I think they want as much cash as possible into their platform that hopefully down the line in a couple years, they can really start optimizing and benefiting off of all the dollars that's going to be in that brokerage. Yes, they're probably going to lose money in the near term, matching all these accounts, switching over, or even the 3% credit card feature. Like, most likely they're going to lose money on that. But I do think they're creating this ecosystem that's really intriguing. And a lot of people underestimate how much of a mode a UI can be. And then they saw the crap that Schwab and TD Ameritrade created together, and, like, holy shit, UI actually matters a lot. Even SoFi's trading app, like, their UI on their trading brokerage is garbage. Like, clearly there is a mode for UI. User experience actually matters a ton more than a lot of people realize in the brokerage business. And you're seeing Robinhood just taking advantage of that and being slowly becoming the market leader in the younger demos, but hoping that they're going to attract the older ones with all these initiatives they're causing. So I think it's interesting that they cut their margin rates today. To give some perspective, I think Charles Schwab and TD Ameritrade, they're like 11%. So
Jim just messaged me saying there's quite a large delay. All right. Paul, do me a favor. Say something in the chat and let me know how long it takes me for me to read it out. Or Jim, someone do it, because that shouldn't be that long. It should be like 5-10 seconds. Jim is saying it's a minute and a half. That's a lot. That's way too much latency. Someone say something in the chat and then let me know after how long it takes me to read it out.
Within a year, I think this time last year they're trading close to cash value. Now it's really not the case.
It might be a lot. One.
The volume, cyclical side of their business is like booming.
Okay.
But they made that
6, 7, 8, 9, 10, 11, 12.
Besides that, yeah, tomorrow's gonna be an great day. I'm in LA. I'm gonna sleep at 8 p.m. So
1 min. There's no way it's 1 minute. Is it actually 1 minute? That's insane. Please tell me no. I put it to low latency. That's wild. All right, we'll try and fix that next time. It should be like 5 seconds. I switched it to low. Maybe it just didn't do it. I don't know. I know I chose ultra low latency. Sad. Oh well.
I support the buying.
I did a little FOMOing on Friday and adding, and I did a little DCA today, but I have so much cash on the sideline relative to, not in the grand scheme of things, but relative to the size of my portfolio and my idea of a long-term investor that yeah, so I'm waiting, but I still did a little bit of buying.
Give us the percentage range. Is it 20? Is it 30%?
So here's what happened. I think it was 2023, maybe, as we were running up that year, I kind of was saying, all right, I'm going to stop my DCA. I'm going to kind of wait for a lower point. I've been doing this and that. Jim, testing, I see that. And then I got to the point towards the end of the year when we finally got that pullback and I added in. But I just, at the end of the year, I let all my cash build up, and it turns out that was a mistake. I learned a lesson. Good thing I did it early. I think my cash is about 40 to 50% of what my portfolio is right now. For a good... Yeah.
Wait, 50%? Holy shit.
So the truth is, like I said, it's from a very specific angle where I was a college kid with no money coming out of it, and then as I'm starting to make money from the first real job out there, then I also kind of stopped my buying a little bit, which it goes against everything I talk about on here as I'm trying to time the market more than time in it. So I let my cash pile build up a little too much over time, and I've been slowly deploying it back in and trying to... There's also a lot of mental stuff in the back end where I'm used to buying in X amount of dollar cost averages over time, and I think I've taken too long to increase those amounts over time to kind of match where my situation is at right now. So I'm learning every single day and getting better at it. 50%... I'm going to say 50% because that's probably where it's closer to than 40%, is way too much than I want, and my plan is to get it in over the next year over so, but I've been blessed to be able to do pretty well that when I add in money, just more keeps piling up, and I'm struggling to go down.
Evan, was that the first time you felt the FOMO feeling, or was it 2021?
Okay, so I will say I don't get that much FOMO. I come at this, like, I was a financial advisor before this. I come at this with a background of, like, there are so many stocks out there, and if I miss one opportunity, oh well, I'll find the next one. And I do own good portions of Nvidia and Tesla and all that, so I was participating in it. I was starting to feel the FOMOs on those pullbacks when everyone's kind of... I don't know. I don't have a great answer for that one. I don't think I feel that much FOMO generally. And maybe it was just last week, and maybe it's been this year, but yeah, I don't have a great answer for that one.
I get FOMO. Like the hardware component, like the Nvidias and SMCIs. I sold Nvidia at 400 and SMCI like 250. I have such bad FOMO. I cannot believe the run it's had, and I'm an AI guy too. Like I knew the hardware space was the first initial stage. I still fumble the ball. I have that FOMO. Especially with,
Jim, it should be less than a minute.
Like for years.
It should be 10 seconds.
That's essentially where I dumped those Nvidia.
That's what I want the latency at, less than 10 seconds.
Shares, and it was in Snowflake, so good for you, Evan, for not having FOMO. I definitely can't relate.
One thing I will say is there are certain emotions we feel, like fear and like FOMO, which get a very negative connotation and stress as well, but small amounts of them I think can actually be a very good thing. So I think that maybe if I would have had that FOMO in the first part of 2023 when stuff's going up and I added a little bit more, then I probably would have been in a slightly better position. So these negative emotions in moderation, I actually do think have a benefit, and I think I've missed out on a little bit.
But it's just, I would just say, like, it's not a good idea to.
I only have a 6-second delay.
We could still be like much
interesting.
Higher 2 years from today.
Oh well,
right?
Nick, Twitter has a 15-second built-in delay, so you're at 21 seconds. I want you guys to be here when I'm saying here before on the spaces.
Right now that I believe are still setting up.
Stay really removed for this.
Like for instance, like I love small caps, so I've been focusing on quality small caps, which I think are still just starting to begin their.
Do you believe in IULs? What is an IUL?
Those returns for small caps last year were very bad.
Indexed Universal Life Insurance.
You missed 2023.
Paul.
Missed everything, and most bull runs last a lot longer.
I'm not an expert in the life insurance space. I won't lie to you. I don't have a good connotation of it though. So my default answer is no, and I come into that stuff very, very skeptical.
If you sit on the sidelines, you might be on the sidelines way longer than you realize just if you're price anchoring.
Actually, logical. A quick question for you. Because you're a similar type of investor mentality as I have.
Yes.
How did you experience the bubble bursting? Like, what was your gut feeling? Were you more of like, were you keep adding DCAing as it was going down, or were you just like, as soon as a trend broke, you just went out? Like for me specifically, I was luckily at that time was investing in larger names, so like it was minimal impact. By minimal impact, I mean I was still down 60%, but it wasn't like the 80% that a lot of people probably assume in the names I own.
Some people have funny graphics.
I grew some gray hairs for sure during that time down, and I had that long-term vision, but that was freaking brutal. And I became a lot more emotional than I thought it would be as an investor, because that tested my boundaries for sure. So I'm curious on that. How did you react when the bubble bursted?
Yeah, it was gut-wrenching for me. I had a very bad performance that year, somewhere between like 46 and 50%. So yeah, very bad drawdown. But to be fair, like in 2020, my performance was like at 97%, and my 2021 was at 32% versus the SPY's 21. So like I do very well in bull markets to kind of make up. And what I'm really focused on,
Paul, a lot of people commenting about that Tesla news, the Cybertruck thing being it. So you're definitely not alone in that thinking.
Small pullback, but even in that scenario,
What's
like
this?
I took some risk off the table when I felt things were changing, but I also didn't really feel like it was the beginning of a bear market, because just statistically speaking, we had two bear markets.
Oops, sorry. Make this loud again.
In a 2-year period. I know we printed our way out of one of them, but we still inevitably got another one. So, statistically we get one every 5 years. So I'm still just looking ahead as, this is a new bull market, and, we're seeing breadth expansion. But yeah, as far as, how I dealt with it in 2022, it was really bad. As a small cap investor, we got kicked, especially because rates went higher. And I got to be honest with you, like, it was, like many people, probably one of my first times getting more and more deeper into individual stock picking. And that's exactly when things get really rough. Because if you're sitting in the S&P, you have enough diversification to, have a 25, 27% drawdown. Hurts, but not that bad. But yeah, when you get closer to like
Eaton acquires
45, 50%, it was very brutal.
Exertherm?
Where we are in the
Weird
cycle.
Name.
And I think that, if I'm being honest, in the next cycle, I mean, there's going to be names that I plan to continue to hold. And, it obviously depends on how much we run from here. And, a lot of information. I'll have to make a decision down the road. But I will probably try to sit out more in cash if I feel that, something is changing. And I think what I'm really using as an indicator right now is I'm very fundamentally driven. So I don't buy a lot of the arguments right now that things are very expensive. I actually have the viewpoint that most things are fair value, and some things that I follow are still undervalued.
I like these posts,
so
Charlie.
As we start seeing this, rally broaden out, as we start seeing valuations get closer to fair valuations, then okay, it's getting kind of expensive. Okay, this is flat out overvalued. Okay, like this is definitely in bubble territory. Like that's kind of what I'm looking for. I'm not saying every bull market ends because of a bubble, but like we're just not at bubble valuations right now. We're not even in overvalued valuations in my perspective, and we're gonna have the discount rate come down at some point, is my view. So that's just gonna allow for further multiple expansion. That's kind of what I'm looking for now, is like how offsides are we? And I think that some people will say, oh well, the S&P is pretty expensive historically.
I'll just quote retweet his, give him the credit he deserves.
So
Good
that's
charts.
not the game I'm playing
I'm a fan.
personally. But
Short
I'm looking
CarMax,
at,
KMX.
how are these
I'll ask.
trading the things that I own? And if you look at the equal weighted S&P, the valuation is much more reasonable. So, how are the things I own?
I saw 50, Paul. 50 is what they're going to be ordering, but you could be right.
And, obviously you want a strong S&P to lift all boats. But I feel like even if it grinds slower over time, and then we start seeing better participation in, the laggards of this rally, then, there's still a lot of room for this to run. And I think it would be I could buy that
Dan
because,
man.
rotations happen.
I got you, Dan. I'm going to ask your question to Kevin. I think he's the good person for it.
For passive to start shifting to active, where active
Emperador
ends up finally being
welcome, sir.
These insane
What's up, brother?
For the Qs, as now you have these mega caps that are basically so large.
Brother?
The law of large numbers is just going to slow down the rate of returns we've seen from the past decade from these leaders. So I think, just trying to find the new leaders, trying to find things that are very valued a lot less. But 2022 was a very big lesson for me. But the biggest lessons I learned was to pay attention. And I would just say,
I missed it.
I know we had
Damn.
0% interest rates, but
some could say you only spoke nice about Apple because I wasn't there.
The silliness we saw with the SPAC craze, and go look at the favorite narrative stock from 2021. Like, Lemonade was like 180. I'm not saying Lemonade's a bad company, but it was 180. It's like still 90% down. Like we are not at that level of euphoria. I'm not saying we need to get there, but we're not even a fraction of the way, in my opinion. So I think it's a healthy bull market. I think that the laggards and the decently valued will continue to catch up in valuation to the S&P's valuations. And so we should I'm still looking at names that are trading at like, I don't know, 5 to 10 times EBITDA multiples in a business upcycle. It just seems like we're going to see earnings expansion continue. We're going to see multiple expansion continue. So I'm not really concerned right now. And I know that's probably famous last words, but again, I don't see it. I feel okay. But next time around, I'll learn from my 2022 mistakes and try to lighten up exposure if I see the signs a little bit earlier this time.
I will say one thing also. The market likes to fuck with people. So I really feel like you're going to at some point see kind of it showing some of those things you might have seen right before it happened to try and get those kind of scared people out. So I definitely hear what you're saying, and I think that's a definitely good idea. But I think recency bias is a big thing, and the market loves to fuck with people. And I think it will. And I think it's not rocket science, but investing isn't easy. And the market will mess with you as much as it can at different points. So we'll be interested to see how it unveils.
I would just say, though, the one thing is the recency bias that you bring up. Right now, I feel like the recency bias is bearish. And I think it's because there was so much pain inflicted in 2022 under the surface. Most investors, especially the vocal crowd, which are retail, they got absolutely crushed, myself included. So, I think that people are just kind of scared to jump in with 2 feet because of how much pain there was and what we saw happen and unfold in such a short time. So, it's very painful.
Yeah.
Whereas people were, seeing gains for 10, 15 years in a row without any bear market, basically. So
I think we might have found out that 3 years might with this whole GME stuff, 3 years might be the level where it's like long enough that you still kind of remember the name, or short enough that you still kind of remember the name, long enough that you forget how it ended and what happened. The 3 years might be that sweet spot there where it can come back up.
Yeah, I don't see that same level of stupidity today yet. I'm definitely on the lookout, but
Bro, RK Jr. just bought GameStop. I think there's some level of stupidity out there.
I mean, but you could have said that last year in 2023 when Carvana was up like 10, 15x. But then here we are 1 whole year later, and the markets are a lot higher. So there's levels to it, you know?
Actually, Carvana, shifting me into a question I got. Dan DeMann in the chat said, short CarMax. What do we think, question mark? Kevin, I was listening to one of those spaces you did with the Schwab Network. I can't remember if it was CarMax or another kind of rental car type name that you were talking about. Maybe it was Avis. It might have been Avis, actually, now that I say about it. But you have any thoughts on CarMax and maybe Dan DeMann, who might be thinking short here? Dan DeMann.
No, I mean, I don't really have.
Was it Avis Budget Group though?
It was Avis.
Gotcha.
Yeah, it was Avis. Yeah, it was Avis. I mean, look, those companies transition from being, focusing on rental cars to now basically being car dealerships. Like that's their bread and butter. And right now it's a little bit difficult, right? We have a fair amount of inventory that's on hand. And in some respects, when you're looking at industry data, you are still seeing a fair amount of purchases being done, especially
Dan.
SUVs and pickup trucks. I think we were very close to hitting notational highs for the first quarter of this year when it came to dollar amount sales for SUVs and pickup trucks, if I'm not mistaken. But it's a very tough business, and obviously there's a lot of competition there. And then I believe, once again, kind of like that travel trend and the utilization of ride-sharing applications like Uber and Lyft are definitely eating into their margins. So, if I'm looking at it more long-term, I would probably be more focused on seeing consolidation in this space rather than a double down or expansion, just because it's just very difficult right now. It's really difficult. And actually, if you kind of look at the cycle, let's say that we are at the, third quarter out of 4 quarters for car purchases, right? And we bottom out. We should then theoretically see new car purchases actually on the rise, right? Which would then also impact their business because they're selling used cars, right? And so I don't really care for Avis. I could care less about CarMax, but I don't see any type of green sheets there that really makes me say, yeah, these are very good values right now.
Yeah, it's not bad for your short thesis, Dan.
So I know Nvidia's tomorrow, but Evan, do we want to touch on it at all? Some preliminary discussion.
Nvidia. I'm excited, man. I'm ready. This should be an interesting quarter because we're kind of at a weird place right now where we've been talking a lot about whenever someone comes on the bear side of Nvidia, it's like there's kind of two-ish things that come up of, wow, it's up so much, and then the bulls will point to the valuation hasn't gone too crazy. And then the other one, which I don't know how great the kind of comeback is for the bulls, is competition is coming. But it's still not here yet. So this is kind of a weird quarter where we're still waiting for AMD's MI300 to really enter the market and be able to take significant market share. We're waiting to see these kind of in-house projects from a Microsoft, a Google, a Facebook, etc., about them kind of making their own chips to decrease their reliance on Nvidia. But everything like that is still a couple quarters away, so I don't necessarily know too much what new information we're going to get on this report tomorrow, Stock Talk. Are you kind of thinking a similar thing? I'm very focused on the competition, the margin it will do. We were talking earlier this morning about Kevin about kind of how quickly Nvidia is innovating, and that story today that came out that Amazon is holding some of their purchases to wait for the next generation of models. So there's a lot of different points to this area, but I think the kind of point I'm getting at here is what I am interested in is how the competition will affect NVIDIA's margins and will impact this market share, and we're going to really get no information about this tomorrow.
Yeah, I think that's the obvious next place to look is at what juncture will AMD start taking market share, but I'm actually not even looking to that point yet because I think based on what we saw in Q1, the sell-through wasn't powerful enough in my view to justify them as a competitor at the top end of the industry yet. So that may happen. I don't know if it's going to take, one of two things can happen. AMD can catch up from an innovation standpoint and produce chips that are almost as powerful as NVIDIA's. Right now, today, they're nowhere close to doing that. So I don't know how many cycles it's going to take before they have a product that's on par with NVIDIA's current generation, because that's what matters. If you say you're on par with the previous generation, that's kind of like a moot point, because Nvidia has already made the statement, or at least Jensen Huang has, that they plan to relentlessly innovate in this category, which means they're going to attempt to reiterate chips as often as possible. And we've already seen that with Blackwell, which is supposed to be coming out later this year. May end up being Q1 of next year, who knows. It's supposed to be coming out later this year. And we saw a report today in the Financial Times, which I pinned at the top for those that want to read it. But the Financial Times was talking about a potential Osborning that's happening between the Blackwell and the H100. Apparently, Amazon halted all of their H100 orders, and they're waiting for Blackwell release. And so they've shifted all of their existing orders into purchase orders, future purchase orders for Blackwell, according to the Financial Times story this morning. So that I thought was interesting. Not that I think it's necessarily going to show up in this quarter. It might. When was the Blackwell announcement, Evan? Do you remember?
Ooh.
Or the exact month it was?
I'll get you the exact date right now.
Look real quick.
Blackwell.
That matters.
The exact date that I first tweeted about it was March 18th.
Okay. Yeah. So, yeah, I don't know if it'll have any kind of impact on this Nvidia quarter, but there's an argument to be made that a lot of things can happen when people are talking about like Nvidia's fall from grace, whenever that may or may not happen. The first thing people always bring up is, okay, well, eventually they're going to lose their pricing power. I tend to agree that eventually they will. The hard part is telling when, and the causation of losing that pricing power is an entirely different conversation, right? It's like if Nvidia does intend to relentlessly innovate, then people in the back half of every year, theoretically, I mean, I don't know how often they're going to reiterate. If they reiterate a new chip every year, then yeah, it'll become more of an issue than if they do it every 4 or 5 years. But let's just assume, for the point of argument, that they're reiterating every year. Then the back half of the year, you're going to see order deceleration because people are going to want the newer chip that's coming out in the following year. So that's just like common sense. That doesn't take a financial analyst or a rocket scientist to figure that out. But then the second thing is, okay, what other ways can their pricing power be affected? Or not even just their pricing power, but their business at all, is if, again, AMD creates an on-par chip that is enticing to these massive purchasers, like the big, Mag 7 and, your Core Weaves and on and on and on. If you can entice those purchasers to buy your chip because it's either almost as powerful but significantly more expensive, or it's on par and there just isn't enough supply to get Nvidia chips when you need them, because again, that's part of having this pricing power. Me and Shai were actually talking about this on the Wolf podcast, first episode, but I was talking about how by having pricing power in a cutting edge industry like this, part of one of the features of that, or you could even say one of the downsides of that, is the idea that there needs to be some sort of bottleneck on the supply. That's what creates the ability to charge these insane prices, and that's what also lifts the secondary market into these crazy premiums. Where on the secondary market, Nvidia GPUs were going for 150, 200% over ticket. That you need somewhat of a supply bottleneck to make that happen. And in a weird way, that also kind of spells an opportunity for other players, right? Because if more and more parties need compute, and you need more and more supply for compute, and Nvidia either can't keep up or chooses to strategically not, produce to the edge of demand, then there will be room for another player. And that could be AMD. It probably will be AMD based on where the players stand today. So, I think there are risks to the Nvidia story, but I think right now most of them are in risks internally, with customers either decelerating orders, waiting for a new chip, or with AMD steadily gaining market share from the base of CPU or compute buyers in general that is increasing. Right? More and more companies now are buying compute than they were a year ago. A year ago, it was really just like the guys who were trying to jump into the race, who had the capital to do so. And now you're seeing more and more companies in categories you wouldn't expect that are buying compute. So, I think that there's risks to the story, but, all of the channel checks, I mean, Morgan Stanley and Bank of America both commented today after that Financial Times story came out. And they both said, yeah, we think this Osborning effect could be real, but based on the channel checks we've done for the current quarter, demand still seems strong. And so basically they're making the statement that this isn't going to get them to change their price targets based on the story that was released today from the Financial Times. So, yeah, we could see a deceleration in orders. I just don't know if it's going to show up this quarter.
Yeah, there's are some fair points there. There definitely has to be some strategies that that Nvidia could implement to kind of take away this lumpiness. One thing that I brought up this morning, and Kevin had some good retorts to it, so maybe he talks about it there, but like maybe saying, hey, Amazon, you could do that, but next when the Blackwell chips come out, you are now fourth in line behind Microsoft, Meta, and whoever who didn't stop buying it. So there's definitely some levers that they could pull off, but Kevin, I know we talked about this a little bit this morning, but I would love to hear your thoughts.
Yeah, I think the way that they do this and be able to retain the market share itself, right, is going to be on the software side and the support side.
Software
there hasn't
and
been a
support.
hardware cycle in any industry that I know of, and somebody can correct me if I'm wrong, that's been around for a very long time. But let's say space exploration, right, with like SpaceX and all that, right? Not enough players in that space. But there hasn't been an industry that I've seen that has been able to maintain on a hardware side pricing power for a considerable amount of time. Eventually competitors will get into the space. Eventually the dynamics of the industry will change. The stock truck's right. Like, when is that going to happen? I don't know. The sign today is not a good one, in my opinion, but I don't think that's going to completely destroy their quarter. I think there should be a question about it. Any good analyst on that call tomorrow, that should be the first question if they're seeing other companies do the same thing. And it's not the fact that they're still going to spend money, right? It's kind of like the Palo Alto effect, to a sense. Maybe Shai's still on here. I'm not sure. I don't have my thing up. But it's kind of like the Palo Alto effect. You know that you're still getting market share. You know that there's competition still in this space. But just because of the dynamics of the business, you might see shortened contracts and elongated sales cycles. Doesn't mean that your product's bad, though. And I think that's could potentially happen to Nvidia. If you flood the market so much with innovation because you want to, drown out your competition, you could also cannibalize some of your existing product offerings. And so I would love to hear Nvidia talk about tomorrow, not only their refresh cycle and how they're going to maintain that, but then also their sunsetting cycle on products. Meaning,
sorry, chat.
Okay, you're going to have Blackwell coming out. Do you still even produce H100s, or do you cap them out? And I'm just throwing a random number out there, guys, just for an example, right? Do you come out with the strategy that says, hey, every new product that we make, we're going to have a run rate of 100,000 of these chips. That's going to be kind of it unless demand continues to be there. And then also you'll have some cancellation fees and contractual agreements that way. And then we're on to the next thing. I think that's going to be the strategy to go, because what we have now is going to be potentially, right, 4 different product offerings in order to meet a need. And you could have a situation where your major spenders or your major customers, which are going to be the Amazons, going to be the Microsofts, going to be the Apples in a sense, right? They might wait. And if you're ever a part of corporate strategy or corporate purchases when it comes to equipment, you do not buy new equipment every year. You may have a refresh cycle and buy new equipment every 3 years, maybe 5 years. And you're talking about products that some of these things are millions of dollars.
How does
like you're
Bloomberg
not going to for a company to try to refresh and spend $1.5 million every year on one GPU or what have you, and they expect to continue to do that every 3 years or 2 years or 3 years, I think is asinine. I don't think that's going to be the case here. And then we also just have to keep in mind too. Let's talk about the S&P 100, the top 100 companies in the S&P 500. Not every single one of those companies needs to buy GPUs. And I think that's something that we all need to be focused on here. There's going to be those that buy them because they have their own use cases, right? And they need capacity. And then there's going to be others that are just looking for other companies that have the capacity that they can train on those particular platforms. And that's going to be a key area to kind of think of as well. But yeah, I'm not... I mean, it wasn't a good story. I'm not bearish on Nvidia. I think Nvidia has commanded the secular story and will continue to do so. But it is something to be mindful of. I try to equate it also to. It's not really a good equation, equitable thing here. But the price cuts. Remember when the price cuts first started for Tesla, right? And then all of these existing customers were kind of pissed off, and people were like, oh man, they're cutting prices. And then they cut prices again. And then people are kind of like, oh, wait, like maybe they're going to cut prices again. Maybe I'll hold off on the purchases because they're going to continue to cut prices. And that kind of is the same thing with this refresh cycle. Maybe I'll hold off because if they're going to have something that's running every year, a new product coming out, let's say that I have a refresh cycle on my own products that I have in-house of 3 years or 5 years, then I'm just going to wait instead of trying to get the next best thing that's out, the new thing that's out there. But the ecosystem itself, I think, is going to be the thing that is going to keep these customers to be very sticky. The software side of it, the implementation of applications. I think there was just a news story that came out about their partnership with, that was earlier this morning, their partnership with Microsoft. Stuff like that is what's going to really carry weight and annuitize the business in the long term. The next 50 years, 100 years out, is going to be software, and it's going to have better margins, where hardware will go through its traditional cycle. I think there's no way around that.
It says also the latency is on, by the way.
This is going to be the first quarter that we have forecasted comps that are going to be fairly tough, right? This time last year is when they came out and shot the street when it came to these new product offerings, and their guidance moved up, 15% or 20% or something like that. So if we see any type of deceleration in that type of guidance forecast, not the actual numbers being reported, but the guidance and the forecast moving forward, how does the street react to that? Is the street really used to seeing 15%, 20% beats on guides, or is the street going to be understandable that maybe it was 20% that they were forecasting in Q1 last year, and now it decelerates to 15, which is not a bad problem. It's not a bad problem. I just think the reaction to that, and what we've seen from every other stock that has done that deceleration in forecast or guidance, the deceleration of guidance. I'm not saying that it's going to go negative. I'm saying deceleration. The stock reaction is going to be key for me, but you don't fade the name. I just feel like this is going to be an interesting report, and I would love to get some more commentary on that refresh cycle situation, because I don't see that that's going to be fairly sustainable for this company unless they constrain supply on a yearly basis for outdated products, right?
Yeah.
Which H100 now is considered to be outdated. That's what I'm kind of highlighting.
But to your point, I think the point you made about the refresh cycle and product release cycle is a good point, and that's kind of to the effect of what I was saying earlier as well. But so I mean, if we use the GTX 16 series as an example, but I imagine for these AI GPUs that it's going to be a lot different. But if we just use the GTX 16 series, so like the GTX 1650 to 1660, those were released roughly in 2018, 2019. And they were retired from production this year, okay? So within 5 years, they retired that chip from production. And they're roughly, prior to this GPU or AI boom, they were releasing new GPUs roughly every 2 years. Maybe now that cycle is we're releasing a new GPU every year. I don't know. Because, I mean, what was the time frame of release between the H100 and the Blackwell? H100.
Yeah, it was like they had H100 and the H200 was announced. It had to be 7 months later.
The H100 was announced March 21st. H200 was announced March 21st, 2023, and then H200 was announced to be shipping in Q2 2024, and then
November 13th is when they first unveiled the H200.
Yeah, so that was 6 months. 7, 8 months, if that.
Blackwell was announced 4 months later.
Because H200 was leaked a month before, right? Like the chatter was kind of hitting the street, but yeah. And then now they have Blackwell, right? Which is another.
So that, and Blackwell was 4 months after that.
Yeah.
So
that's quick, dude. That is quick, man. I mean, you know what I'm saying? That is pretty quick. And I feel like if you're already talking about potentially cannibalizing your H100 and you just announced that bad boy last year,
and they'll probably announce
capacity strategy.
They'll probably announce Blackwell too by middle of next year at this rate. I mean,
yeah, that's what I'm saying though. But if they are on a conference call and they're saying, yeah, look, our run rates for H100 is going to be 2 years, right? Every product cycle, instead of it being 4 years or 5 years on the our traditional cycle that we've had for other products, we're going to do this run rate every 2 years. Because if you think about it, it's going to eat into their. Here's the reason why I bring that up. It's not like Taiwan Semi's just rapidly increasing their capacity to do this stuff, right? So you're going to have to. I feel like you're going to have to still kind of maneuver in order to have a main fab to be able to keep up up the pace? And do you want to continue to make something that's already 3 generations, almost 4 generations old, or do you want to sunset that bad boy after 2 years and free up capacity for others? That's my.
I mean, I think it depends on how they contextualize it too, though, right? Like on how the street interprets it. Like if they say, look, we're going to have a softer back half, and we may have softer back half of the year in future years because we intend to remain on the cutting edge and innovate relentlessly and release new products every year, every 6 months, then that maybe makes it less bad from an interpretation standpoint. You know, I mean, if they justify it that way.
Well, yeah, I think you and I are looking at this 2 different ways. I don't think you're going to see the backlog of orders going down, right? Here's the thing. What I'm talking about is inventory gluts on older models, right? And if you can synthetically sunset those quicker than what we're normally used to, then you can front load demand on newer models. You see what I'm saying? So instead of like still producing H100s 2 years from now, 3 years from now, when they're going to be, I mean, they're already going to be 4 generations, 5 generations behind. What if you actually came out to the street and say, hey, you know, like at the end of this year, the H100 is getting close to its product cycle, if you will, and we're going to discontinue generating those or producing those, and now it's going to be H200 up. And now you have a new.
Yeah, I don't think
you see what I'm saying? Forcing that
backlog. I don't think their backlog is going to be impacted. So that's not the point that I'm making either. I don't think that it's going to happen either. But inventory glut is exactly what Bank of America was referencing in the note as well, right? So exactly to the point of what you're saying. So I just want to clarify that. But continue.
Yeah. So I'm just saying you're gonna have to control the inventory on the backside. What you do not want to have happen, right, is if you have H100 still being run, you have all these new products, people are delaying orders, you're still flooding the market with H100s, demand starts to get soaked up here a little bit, right? And then your H100s, you'll have to start marking those down in order to try to move those inventories. It's a regular inventory glut cycle. But when you're talking about this space, right, if you make it where you can buy more H100s in parallel, right,
Kevin,
compared to one bigger one, instead of buying maybe a Blackwell, and I'm oversimplifying this, right? But like, you kind of see what I'm saying? Like, I feel like they need to synthetically do that. And if they come out in the market tomorrow and say, yeah, look, the H100, like it served its use case. We were able to get our foot in the door, right? We have interest in this, but we have better products that we want to be supplying, and kind of drop off that supply. I think that's the way that you're going to be able, if you're going to do every year 1 or 2 products, I think that's going to be the way for them to continue to have this perpetual cycle and ice out the competition while also not cannibalizing their own demand.
It'll be interesting to see what happens to the secondary market for these H100s when all these companies, these major companies who spent so much money getting it in there, and in 2 or 3 years or 1 year or maybe next month, who knows, they'll need to start replacing those, and I wonder what happens to that secondary market.
Noah, go for it. You want to jump in and make a comment?
Yeah, I think there's a lot to unpack. 2 areas I personally think is being underestimated is this drug discovery area, where I think there's going to be a lot of this kind of brute force drug discovery. And what brute force is in computing, where you just try everything. You don't really be strategic about what you're trying, but you're trying so many different combinations that you hit upon gold.
Fill up the water bottle. I'll be back in a second.
And the other area I think is going to be huge is this kind of self-hosted AI. And what I mean by that is, like, JP Morgan is going to start training their own ChatGPTs with their own private data sets. And why they're going to do this is because they don't want to hand over that data to OpenAI. And there's a lot of this kind of subject matter data where that's extremely valuable. And we've seen it with this big contract between Reddit and OpenAI. So there's going to be a lot of those kind of collaborations, but there's also going to be this need for a lot of these large organizations to be hosting their own and doing their own training. And there's just a huge demand for that.
I agree with you. I think we also have just kind of keep in mind too. So like a lot of these models like ChatGPT 4, or whatever, it's trained on a whole bunch of different data sets, right? It's a wealth of knowledge. But if you're an industry or you're a company and you need to have a model in the same way that you're kind of talking about, right? This brute force type of trying to crack the code, if you will. You don't really need the other data sets, right? If I'm running a model, do I need my model to know what happened in ancient Rome 3,000 years ago? No. Like, I just need to train it on my own data sets. You may not need as much compute as you think. That's what I'm trying to say. Like, if you're actually building your model out from scratch or utilizing a framework like Llama to at least get started, which is going to be open source, right? So I'm right there with you. There will be certain use cases for it, but I think the majority of enterprise application is not going. I don't think you're going to see a lot of enterprises on a grand scale building out data centers to train up their own models. I think they're just going to utilize the capacity that a lot of these players have. OpenAI is a really good example with that, right? Every security officer for every single company is concerned about handing over data or training data on models like OpenAI, right? Because the fear of that, not only the proprietary data that you give out, but if that proprietary data is being trained and then now it has actually a use case within the biopharma industry, and does that company now go out and sell that model to somebody else, their competitor, or gain secrets and things of that nature? Like, I get that. But I believe the majority of those enterprises will be utilizing cloud infrastructure in order to build out these models to start. And you need to work on your own data set for your own use cases. And if you're building a model, it's completely pointless for you to train something that you don't need, right? Do I need the history of the world in my model that I'm utilizing in-house to be able to process accounting, accounting things and things of that nature, right? Billings or looking at trends and stuff. No, I just need it to do what I need it to do. So, but I think the long-term trend is there, right? The long-term trend is there. I just think that you got to figure out. What
do you do?
From them specifically, you got to figure out how to manage the supply in a way that always makes this scarce enough, but also putting out enough innovation out there to continue to drive demand on the front end, and you don't have these situations like Amazon. And rightfully so, right? Amazon's making a very smart move. I would agree with them on that, but it's not something you want to see, right?
Shy, I wonder if you have any points. Doesn't have to be directly what we're talking about here on Amazon, Nvidia, but just Nvidia earnings tomorrow. It's like the stock market Super Bowl. Us nerds who sit here and talking stocks all day. It's a big day tomorrow. How you feeling? What you watching?
It absolutely is. Putting my corporate strategy hat on, I've been in it for close to a decade. Kevin is right, though. Like, there is a certain brief window every single year where all the sponsorships or whatever the CapEx requires to sign off of spend the money that you need for the following year. If the windows or cycles become less than a year, it's going to get a little sticky or tricky on, do we buy this now or should we hold off and get the more innovative chip that's more processing power, etc.? Like, perfect example is PS4. I know a couple people like wanted PS4s and they knew that the PS5 was going to come out within 6 months, and they held out those 6 months because they knew they were going to regret buying it right away, and they should have held out for 6 months to get the better product. It's similar pockets of the Nvidia chip, but I think the only caution is probably like a low percent chance, like not even really a caution, is will this affect their near-term guide? If this is not just an Amazon issue, if this is actually multiple companies are kind of have that light bulb moment of like,
chat.
All right, well,
How we doing, chat?
Near term, we could.
We're coming to the end of the spaces, but we'll just keep it going as long as this conversation keeps moving.
6 months. Let's just do that.
How you feeling, chat, though?
If that's the case, I guarantee the soft guide up is going to cause waves across all headlines and all the investors. All the streets and all the bears who missed out on this like Nvidia run and missed out on this AI run are gonna harness that narrative and just beat it to a dead horse for like weeks and potentially months. That's the worry I have. I see the demand is strong. It's still like again, I commented that
I'm pretty new to stock market back, but I just want to say thank you. Really enjoy your talk
and, like,
and your
we
comments.
saw
Awesome.
the
Nick,
big
I
tech
appreciate you,
CapEx
man.
spend is continuing. It's gonna get there
Nick,
again.
nothing I say is ever financial advice, but one thing I do want to say for newer investors, ETFs. ETFs are a fantastic way to start. I really think so. I personally have been dollar cost averaging into QQQ and then VOO, adding them to significant parts of my portfolio, but too many people come in the glamour of day trading options or doing this or doing that. The average person should just buy market-based, broad-based ETFs like the S&P 500, like the Nasdaq 100, and just buy and hold for retirement. Like that's truly what I believe. So we'll see, but yeah, Nick, stay skeptical, stay eager to learn, and you'll be a killer in this in no time.
Essentially launching post cloud, where a lot of Palo Alto
I appreciate you being here, Nick.
Hardware and like they absolutely have a great product. So it's just they deal with massive deal sizes, and because of that, a lot of those deals are getting pushed out a bit on the duration, and that's affecting the billing. Like the reason they're down today and got scooped up but down is because the billings growth, low single percent gain. I think it was like 3 or 4%. That caught a lot of people off guard, but again, the billings is not the metric to judge Palo Alto on because of the deal size component of it. They also have government deals coming through that I don't think got reflected in this most recent print, but like essentially Palo Alto is going to get their
post this in like a community
like,
or
they're
something.
Going to get it. It might not happen in the near term, but I do think that they're setting up for a really dominant 2025 because of the duration of their deals just getting slightly pushed up.
Nice, Nick. What ETFs do you own?
Platformization. They're giving out products for free to incentivize like customers to kind of use their platform. Like they're going through a lot of onboarding headaches, and it's gonna be beneficial for the long-term investors down the line. That's why I'm saying 2025 is be a good year for them. But for Nvidia, again, like they benefit for one straight year of just
MSCI World, interesting.
Demand. And today's Amazon announcement, like it could be a nothing burger, but even if there's a single-digit % chance that this could become the new trend for the next 3 months, I do think that heartburn could cause massive waves just in the next couple months.
Nick, where are you from?
It's breaking on the whole thematic of AI, or that Nvidia is losing market share due to competition, or pull forward demand all happen at once, and like that's really all it's going to be. The rest is just going to be
I hear you.
Level playing field. It's not that at all. It's just really awkward.
I'm a massive believer in the U.S. economy. I'm gonna be honest. I love me some S&P 500, Nasdaq 100 too, QQQ, VOO. I live all day, every day there. But I hear what you're saying. FTSE is the index over there, correct? FTSE. That's UK. DAX. This is the German one, right? DAX.
And they become less cyclical. I do think the earnings growth will be a lot easier to model out for the next 5 to 7 years, and I do think analysts will like that a lot more. I would love that a lot more if there's more predictive revenue streams for Nvidia.
Deutsche.
If the software component starts blowing up even more, which I do think it's going to be,
Muncher,
because they have the leverage and luxury of being able to like kind of shove it down all their clients' mouths. Like they could do that.
I
do think they're going to be
doing
that.
Interesting.
But yeah, that was my 2 cents. I think everyone else covered a ton about Nvidia, but I'm just looking through the read-throughs, and I know any kind of if on the call they say that
AUM,
they didn't guide up as much, like they've guided up 5 to 10%, which I
don't know what ABB is. I like Intuitive Surgical.
It's crazy to say if they guide.
I don't know a lot of these names.
Estimates, like that's
I won't lie to you.
Not going to be digested well, in my opinion. And they call out in the conference call, like the reason for that.
This is when the Jaguar got me into MedTech ETF.
But it's totally
Germany's like 6 hours ahead. It's probably like 11 p.m.
And they're gonna hopefully communicate.
Nick, 11 p.m. there for you, or 23, as you would say.
Blackwell's a one-off, and it's just gonna happen every 2 years, like it's usually. Who knows what it is? But I hope they provide more clarity through the noise of their soft guide up, if that does happen, or party continues. We'll
11, there you go. I know.
No, you have your hand up?
I might be coming to Germany this year. I might be trying to go to Oktoberfest.
If they've already placed the orders, you can place deposits, right? So
yeah,
I think there is a lot of kind of this accounting stuff we don't really fully understand, right? Because if they are
so if that's cool, let's see history. So
in the future,
I could see
and Nvidia is going to go
top
back to them and
holdings
say,
for
look,
the Nasdaq 100.
Put down a
2014 versus
preliminary
today.
order or something along these lines, then I'm not fully aware of how the accounting works. So I wouldn't kind of expect that to be a huge problem.
Yeah, I think we're getting into the weeds here. I'm curious to see, over the next couple of years, once again, what the companies that are actually buying these, what's the useful life of them.
This one feels interesting.
How they account for that depreciation.
Maybe I'll have to look deeper.
On their financials as well, and if it's going to be worth it, right? Because that will be a drag when you're looking at net income and cash flow statements and things of that nature. But if they're seeing top line growth,
underperforming some of the other ones. What's this fucking orange one?
Then, we're not there yet, but how do you
SMH.
decommission these products?
XSD,
right?
whatever.
So
that's a tough bar.
Any type of computer equipment, server
look at how
equipment,
semiconductors have been doing.
Once you're done with it, from a security standpoint, depending on the company, right? Especially from financial.
Yeah, I really want to go.
A lot of them, they actually just get destroyed.
I'm also a Dortmund fan, fan of the good old yellow wall, so I want to go to a game there for sure.
Remaining in those particular products.
Looks so much fun.
We're not there yet, right? We're getting completely far ahead. I just feel like the capex spend that we are seeing right now
Micron,
is obviously an exponential ramp up
Impinj.
because the demand is definitely there.
This ETF has been killing it.
I don't think that ramp up that we are seeing from an exponential standpoint continues to move in that same trajectory. I feel like it will level out after some point in time because it would be
there's one that beat it here.
expensive to once again have
S&P 500 information tech.
Every 3 years. We're not there yet, right? And we're not going to get that on the call tomorrow. I think we're going to get a decent report. I think the guidance most likely probably will be decent as well, right? I think we're going to hear more when it comes to the software side of their business, which I think as you kind of talk, I think
soccer games are unmatched. Football.
That's going to be their bright spot. That's something that can actually sustain itself for years.
I'm a Liverpool fan, so it's a rough time for me. I can't lie. I'm worried.
On an annuitized basis. I think
Liverpool and Dortmund.
Definitely not talked about as much.
Mostly Liverpool, though.
Going to be their bread and butter moving forward, as long as they can get enough people to buy these things quick and fast, and they're able to just integrate it and make the product really sticky. So, we'll see tomorrow. And then we could have a nothing burger with this earnings announcement too, guys, all right? It could come out, and we could be like, okay, and there may not be a move. We could be in that particular situation. I can tell you market makers are going to be juicing up these premiums, and they already have.
I'm excited to go to some games, though.
To protect themselves. I would be actually thoroughly surprised if we get the expected move. If we go,
don't you think it makes sense to diversify your portfolio outside the U.S.?
Just because of that fact.
Well, think about it.
We'll see. I'm not bearish on this.
Nick, do you use Amazon, Google, Microsoft, Meta, Apple? Do you use any of their own products? These major U.S. companies are massive companies around the globe, and I think this just might be my U.S.-centric perspective. America, fuck yeah, that type of thing. But I would just rather invest in those companies with a very large home market, a large exterior market, which they've been able to break into, and yeah. So, but I hear what you're saying, Nick. Yes, I very much do want to make sure my portfolio is diversified globally, but I also consider it being diversified globally when the companies are getting a large percentage of their sales from overseas. Kind of the way I look at it. I think it's a combination of both, Nick. Don't you want direct exposure to the U.S., inside the U.S.?
Demand is going to, slow down where, normally what happens with computing is people find new use cases and the demand for compute increases, right? So I'm just wondering why is there this kind of...
I didn't say it was going to slow down. I didn't say it was slowing down. I'm not saying that it's going to slow down. What I'm saying is that their product offering, their first product offering...
Pochettino leaving Chelsea.
Right?
Rest in peace, Chelsea.
Do they still plan on building those out for the next 2 years or 3 years? Or since they have 3 products right now, could it be a 4th one hitting the market? Do they try to decommission the H100s in order to force buyers into the newer products? kind of like the Apple strategy. That's all I'm saying. I'm not saying that there's going to be any type of deceleration at all. But if you have people that are holding out for right now because they want the newest thing that hits the market, that could impact the guide. And I don't think that's not saying that people are that the demand's not there. I just think that there is a point, right, in any company that's out there that you can have too many products, and you can soften demand across the curve. That's just something that can happen. So that's all I'm saying. I would love for them to talk about that tomorrow with the story that came out today. And if they do say, yeah, you know, like the H100, it served its use case. We're looking at bigger and better things, and we probably won't be producing them after the end of this year, right? Because we have better things out there. I think that the biggest concern is the supply glut on the oldest model that's out there. That's what I'm talking about. And hopefully that provides clarity.
Yeah, I think that's not such a concern because, you know, they do these kind of pre-ordering, you know, there's this long lead times. So, yeah, maybe they do cannibalize the old chips, but if, you know, OpenAI, they're trying to do now like translation and all this kind of stuff. So I'm sure they're going to be, you know, ordering more of these other chips. So I don't see that
company
as
restructure there for Lulu.
Maybe for one quarter that could be an issue, but again, if they're providing like full year guides, I just don't see that as like a huge issue for them.
All right, let's see if we got any defense contracts for the day.
Okay, yeah, and once again, we're talking like years out. I'm not saying like tomorrow is the problem, right? I'm saying down the road it might be an issue for them, but we'll see. We have a little bit of a differing opinion, and you know, we'll see how this all pans out. That's what I'll say. Right?
We're getting close to that point. 1 day away, less than 24 hours. If we're getting technical, it's 23 hours and 12 minutes away. For anyone wondering, I think I did that math correctly. 4:20 p.m. Eastern tomorrow is what time we get those numbers out. So I'll let you do it for yourself there and double check if I'm right. Stock talk, we went down a little bit more of a conversation there, and you sparked us down. Do you have any extra thoughts you want to add into what they're talking about there, and then anything else kind of top of mind for you with those Nvidia earnings tomorrow? I mean, you know what? Fuck it. We'll tack one more question onto it as well. You watch Snowflake at all?
Yeah, I mean, we've talked about it a little bit. I mean, I think, you know, I agree with Shai on the importance of the company and the ecosystem. I think they're a long-term,
22 hours, actually.
You know, secular beneficiary of the cloud.
4:20 p.m.
trends,
Eastern.
I think the cloud itself is going to be a huge multi-decade theme. I mean, we've seen re-acceleration in a lot of cloud-related metrics this year, especially with the Mag 7 report. So, yeah, I'm super bullish on pretty much everything related to the cloud, and obviously Snow has an important place there, you know, being a multimodal software you can use on all of the major clouds. And so, yeah, I think from a product standpoint, I agree with everything that Shai has said in the past about it. Same thing with Logical. But as a trader, I just try to find the opportunities where I think, you know, there's momentum, the technical picture looks rosy, and I can get in and make a trade and get out. And it's just not there for me yet. And, you know,
I see you retracted the message, Goose. Is it 23 hours, I right?
A lot of the...
Is that right?
Speculation about
23 hours and 11 minutes now. I'm stupid sometimes.
If the prior quarter was really just, you know, a throwaway one-time thing, I'd like to get answers to those questions first. So I'll probably be, if I am going to trade, I'd be trading that after earnings. But yeah, I will be watching those tomorrow. And on the Nvidia side, I mean, look, I think people are going to over-focus on Nvidia's earnings report as like this barometer of whether the AI thing is real or not. And, you know, I think that's silly. I think regardless of whether Nvidia beats or misses, this AI theme is very, very real. All of the biggest companies in the world are telling you that. They're telling you they're spending more money on it. The CapEx is going to accelerate over a multi-year period for all those companies. So that's really where I look to for cues on
Goose.
Whether
that
or
might
not
be a
it's
tough time.
But on Nvidia itself, I mean, look,
I'll slip the question in there to Kevin. I know he loves him some oil.
Quarter, like dramatically, you know, I think they've gone up like 50 plus times, 50 plus revisions to the upside. So they have a high bar to beat, but everybody on the street seems to be singing to the tune that there's still very strong demand. I mean, the B of A and Morgan Stanley notes that came out today addressed the whole Osborne effect thing in the Financial Times article, and they basically said that they're not concerned about it because their channel checks are still very strong on GPU demand. So I think the theme is still fine. I don't have a prediction or a position on Nvidia. I don't know if it's going to go up or down. What I do know is it's going to drag probably at least the rest of the semi-complex with it, if not the rest of the market with it. And I think the latter is probably more likely. So it'll be important. I mean, we'll be watching them both very closely, but no predictions for me on what's going to happen. I do think in the medium term, there are some factors they need to address. So on tomorrow's call, I hope they touch on kind of what we talked about, cannibalizing or Osborning previous generations of products, what their refresh cycle might look like for AI-related GPUs as opposed to what their traditional GPU cycles look like. In the traditional GPU cycles, you're talking about discontinuing products after roughly 4 to 5 years, and you're talking about, new iterations of products roughly every 2 years. Now we already know, based on, the sample size is small, but based on the previous year and a half, we know that they have accelerated the product reiteration, right? I mean, they've gone, we were just talking about these dates, roughly speaking, but, they've released 2 new products in a span of, 4 to 6 months a pop following the H100. So that's a much faster refresh cycle. And on the inventory front, I'd like to see, like to Kevin's points earlier, how they're managing that and what their intention is there. Are they going to sunset these products within a year's time? Are they going to sunset these products a year after the new version is released? I mean, I'd like to get some detail on that, and I don't know how specific they're going to be willing to be, because this is a relatively new theme. So they may not be willing to be specific on that front. But I'd like to get answers to all of those questions, because this is really Nvidia versus itself right now, in my opinion. I don't think AMD has proven enough penetration yet, and I also don't think the market has given AMD enough credit as a competitor in the space yet. In other words, I don't think the Mag 7 are really going to AMD with the majority of their capex. I think they're still singing to NVIDIA's tune. And so as long as that remains the case, I think it's NVIDIA versus itself in the GPU space. And they need to prove that they have a strategy, not only to fend off competitors with future innovation, but also to manage any potential inventory glut, and also give I think, more transparent picture on what refresh cycles might look like going forward. So that's what I'm looking for.
Speaking of that last point around AMD and Nvidia, I was watching the Microsoft Build Developer Conference, and Satya spent a whole 5 minutes going through their partnership with Nvidia. It's a full stack partnership. It's super important. It's this and that. And then he talked about AMD, and he was one of the few people who have talked about AMD, but we had a 5-minute thing on Nvidia and how there's a full stack partnership, and then he said, oh yeah, we're using AMD. We're the first people with this MI300 thing generally available. Cool. Go use it. Exciting. Done. It was a 5 minutes on NVIDIA. It was 30 seconds on AMD, which is more than AMD's gotten from a lot of these other companies. But I definitely would agree what you're saying. It's an interesting one.
There's a place for AMD. AMD's not dead in the water here. I talked about this earlier, but NVIDIA's position inherently requires somewhat of a supply bottleneck, right? The products... if anyone could get an H100 at retail, then it wouldn't, they wouldn't have the same pricing power. And so there is, by virtue of having a supply bottleneck, there is room for a mass market player. The question is how quickly does the demand pool grow? How quickly do the constituents that want to buy compute in, enormous quantities, how quickly does that pool grow to where there is room for a mass market in AI highly advanced GPUs? And that may happen next quarter, that may happen 5 quarters from now, I don't know. But for now, like I said, in my view, it's still NVIDIA versus itself, and versus the expectations the street is set for it.
I am looking forward to it. Here, I'll say this publicly right here. If NVIDIA opens trading on Thursday over $1,100, I will handwrite in Jensen Huang's name for president in November. Stock Talk, I expect you to do the same with me. I'm very well aware that I know he cannot win because he's not from the U.S., but won't stop my vote if we open over 1,100 on Thursday. Omar, Mr. Holmar's blog, joining us up here. Always love hearing your thoughts. I know you're deep in the AI and Tesla world and all that. You excited for these NVIDIA earnings tomorrow, sir?
Yeah, I think it's going to be fun. I think it's going to be a bellwether, really.
I'm not kidding, Nick. I'm going to do it.
In the industry.
1100.
And hopefully they blow out expectations, because I'm also an Nvidia shareholder. And I think I'm going to be doing a space with Gergavin and cover the earnings too.
We hate that, Gergavin. No, I'm kidding. We'll be on that spaces too as well. So shout out to that. It will be a good conversation, breaking those numbers the second they're out. We're also going to be listening to the earnings call. I have a feeling William, my boy, might be making an entrance. If you teach me how to do it, I could just be the person who does those, but I digress. That call, let me double check what time the Nvidia call is.
It's pretty easy.
Investor, yeah. Let me just get up what time the Nvidia call is tomorrow morning. It's either 5 or 5:30 generally, but I just want to make sure it's in front of me. You watch anything specific tomorrow for Nvidia though, Omar?
Well, I mean, I think everybody's really looking at the data center business and what their forecast is for the future.
Yeah, the data center will be everything. 5 p.m. Eastern is what time that call is tomorrow. 5 p.m. Eastern. There also is an annual meeting of stockholders on June 26th. Yeah, the numbers are released at 4:20 p.m. Eastern, Emperador, but the analyst call is at 5 o'clock. I'm a little surprised, Omar, that Tesla doesn't release their numbers at 4:20 p.m. Eastern, but I digress past that one. Yeah, these Nvidia earnings should be a very exciting one that I am looking forward to. And yeah, we should hopefully get some price movement. I know Stock Talk was saying that this could, or Kevin, it might have been this. There is a world where this is a nothing burger, where they come in slightly above expectations. Everyone's kind of talking about, okay, the questions we have still haven't been answered, and Nvidia opens up at 9:50 on Thursday, and we just built up all this excitement for nothing. I hope that doesn't happen. Definitely could, though. All right. I'm going to go for it.
I think it's kind of interesting just what you're seeing in the industry. There's a massive amount of demand still for these things, and just adding more and more of them, training larger and larger models. If you noticed at the end of that OpenAI presentation where they unveiled their latest model, which now doesn't process text, right? It now processes audio and images in real time.
Later, so numbers may
so it's
be
actually
later,
hearing
just
your voice rather than just taking the audio, converting it into text.
No, they put it at the same time. 4, 405, 410, 415. Tesla's numbers come out at 410 Eastern.
To make this possible. So not only are they training larger and more complex models that take in, multimodal data sources, but they're just training these models that are hungry and hungrier for GPUs. So I wouldn't be surprised at all to see them continue to blow away the market's expectations.
Omar, you weren't here when we were talking about the Osborning thing, but I'm curious what your opinion is on that. There was a Financial Times article this morning, I don't know if you saw it, that said that Amazon is halting orders for NVIDIA's H100 and H200s to wait for the Blackwell. And people are starting to discuss whether there's going to be an air pocket in demand for AI chips.
No, King Goose. I appreciate the theory.
Or in between their
I hope it didn't come off super. I probably came off a little
Curious
dismissive, but hopefully not shitting on you dismissive. I appreciate you giving your thoughts.
I know who's really excited about this story is the guy in line behind Amazon, because they are several times oversubscribed from their production level, and they can find somebody to take those GPUs, I have no doubt. Maybe they have to give a bit of a discount or something, I'm not sure, but
yeah, I appreciate you, Goose.
I wouldn't be too concerned about it. The market's demand and hunger for these chips is just extraordinary.
Yeah, I think that's a good point. Yeah, I mean, we'll have to see. I haven't seen any kind of cue or signal. I mean, from all the reports I've read that, there's a reason everyone on the street is bullish. There hasn't been really anyone that's found any kind of channel check or industry survey or, even piece of anecdotal evidence that suggested that demand is down. So we'll have to see. I mean, maybe that's setting it up for a crowded trade headed into the earnings report, but I don't know. We'll find out tomorrow, obviously.
And let's see how that plays out for Amazon, right? If they don't have the capacity for their clients and people move to AWS, move to Azure, then, it's a risky move from them as well. So they must have kind of done their own projections and think that they got sufficient capacity but you might also find that Azure and Microsoft could be one of the winners from this move. So it's not clear how it all plays out.
That is fair. I was kind of talking about, like, if I'm an Nvidia and I really want to try and fight this, hey, part of the contingency of you being first in line for the Blackwell is you kind of continuing with ordering some of these other chips. I know there I got some pushback on that thought earlier, but it sounded like it could be good. So we'll see.
I mean, look, the analysts have pushed back against the idea that there is any sort of lapse in demand or any sort of Osborning going on anyway. I mean, despite that Financial Times article today, you have Stifel, who came out yesterday, or Stiefel, however you want to pronounce it, and they said that we are not expecting any meaningful change in tone or messaging relative to what we heard at GTC in mid-March. Our supply chain checks continue to show a robust demand environment for the H100 and H200, even as excitement around Blackwell continues to grow. We are increasing our estimates across the board ahead of earnings, moving our price target to $10.85. We have a 2025 EPS estimate of $31. Nvidia remains our top pick in our AI coverage and across our universal coverage. And then you had Baird as well yesterday coming out. Let me pull up this Baird segment right here. Yes, you had Baird yesterday saying, we are raising our estimates across the board ahead of NVIDIA's earnings report. There is no match to NVIDIA's product offering from any competitor, either this year nor next, according to all of our industry surveys and discussions with CEOs in the industry. Combined with shortening lead times, should play well into the second half of the year from a market share standpoint. We're raising our GPU unit shipment forecast for this year, with strong growth expected for 2025 as well. And we're supporting our raised revenue forecast for the year with this commentary. Outperform rated. And so pretty much everyone on the street is in the same side of this ball. That doesn't always turn out well. Sometimes it turns out very, very well. I mean, even during the Meta turnaround story where we saw that stock go crazy last year, most of the street inflected their opinion, I don't want to say at the bottom, but pretty close to the bottom. And the stock kept going. So, a crowded trade or a crowded series of opinion or consensus opinion doesn't necessarily mean that outcome won't happen. But it is a pretty consensus view from the street. Again,
we need to make a
higher
high.
Morgan Stanley and Bank of America came out and said
Ethereum needs a higher high for the
story
cycle.
from this morning was not going to affect their thesis at all. Noah, go for it.
Yeah, I didn't read the actual article, but does it say like new orders, existing orders? Because it could be the case that they've like ordered a lot, they've taken delivery of a lot, and they have enough capacity for now, so they're just not doing new orders. But
the story was only about so to be fair, the story was anecdotal, right? The story was anecdotal to the extent that when you have a product that everyone wants, right? Which the H100, when it came out at the cutting edge of, the AI race, everyone wanted H100s. And now that the Blackwell is not only more powerful, but significantly more powerful, you have companies that are stuck in this accelerated CapEx cycle like Amazon, who are like, why would we drop $5 billion in this tail half of this year on H100 or H200s rather than just pushing back those orders to wait for the Blackwell release. Now, to Omar's point earlier, NVIDIA may be managing its supply in a more intimate way. NVIDIA may be saying, look, if you're not willing, if you're going to pull back orders, then you're going to be pulled back in line on the priority list for Blackwell, right? We already had Google come out and talk about in their presentation how they're high on the priority list for Blackwell orders, and they'll be getting them basically at release. That may not be the case for every customer. And so I don't know the dynamics for that. I mean, I'm just speculating. We'll find out more on the call maybe. But there is a strategic dynamic here to managing supply. Kevin was talking about this earlier. It's really the difference between how well and how effectively you sunset your previous generation of products versus how quickly you're iterating on new cycles. So if NVIDIA wants to release a new chip every 6 months, this is going to be an issue. Because then any company, like imagine if you're at the tail end of a 6-month cycle and you get a $3 billion CapEx package approved for AI chips. Are you going to buy them there and then? I mean, no, logic would dictate you'd wait 2 months for the new product release that is around the corner, right? So there may be something with regard to like staggering new product releases
Chad,
or
I should
making
have
the
put
refresh cycles
7
like
green
less
apples.
impactful.
Fuck, I'll do it tomorrow.
You know, like if you talk about like for gamers with like Nvidia's, you know, gaming GPUs that people put in a lot of their computers, if you talk about like when they made new generations of those, a lot of gamers would skip a generation. They'd be like, oh, you know, mine's good enough. You know, it runs what I want it to run. On the AI front, that's not what these parties are thinking. Microsoft's not like, oh, it's good enough. You know, we'll just let Google get the new shit. We'll just run on what we're running on. Of course not. They all want the cutting edge because they are in a race to, you know, get to this AGI endpoint that everyone wants to get to. And so, yeah, it's a very dynamic new industry, and like it's very interesting. But we'll have to see how Nvidia manages both inventory and demand on both ends of that cycle.
I'm also very interested to watch here. I guess it's more of an empirical thing than anything else, but there's that saying of like, you know, an athlete who starts waking up in silk sheets, are they going to do the same thing as when they were kind of grinding? And Nvidia's been on top of their certain industry for a while, but not like this. And I will say, from more a human nature standpoint, I have no real reason from firsthand stuff I've seen, but like when you're in first place, it's a little bit harder sometimes to get yourself motivated than when you're in second place trying to catch up to an Nvidia or something like that. So I will say I don't know how much that's going to work itself in or how I would even see it, but that is definitely something that I am focused on of like, okay, Nvidia, we know you've created this awesome thing, and we know you have the capabilities and the team and everything like that to continue building this. Will you continue to keep your gas on the pedal now that everyone there is multimillionaires in stock? I don't know. We'll see. But that is definitely human nature is a pretty strong thing, and I think it's some human nature to step back a little bit at some point. We've even kind of seen it with like Tesla executives. Like we know Elon Musk pushes really, really hard, and these Tesla executives leave after a couple years, but it makes it a little bit easier for them to leave when they have X amount of tens of millions of dollars worth of stock that they've received over the last couple of years. So I don't know if that's the best example to directly say what I'm saying here, but that is one thing that more on the empirical side, nothing with data, nothing with that. When you've climbed to the top of the hill, can Nvidia keep itself motivated to continue climbing up that hill and find a new hill?
I think it would be more a problem if Nvidia had like a very aged talent pool, but they don't. They have like a very relatively young talent pool for a company of that caliber, and like they are best in breed, right? I mean, you've seen anecdotes about this. Like there was, I don't know who it was. It was the CEO of one of these AI startups. I can't remember, but he was talking about how he was trying to poach talent from Google.
I think so, maybe.
The engineers were like, how many H100s do you have?
I could see that being the case. Well, time will tell, but
it's this concept of like, if you're in that industry and you've made millions of dollars in stock already, which most of the top talent at Nvidia has, then you probably can make millions more, frankly, you know, by sticking around because they're that far ahead. And every industry starts this way. You know, we talk a lot about like competition and everything becoming commoditized. But that's been a headwind for Tesla, too. The commoditization of the electric vehicle industry has been a huge headwind, right? We've seen what the Chinese have done on the pricing and quality side that makes it difficult to compete with. And, you know, you see that in every single industry. When an industry is new, the leader in that industry generally has an innovative advantage, that their product is better because of some discernible advantage that the product has versus all of the other industry peers. And that lets them become an industry leader. But that advantage is variable. I mean, sometimes it lasts a year, sometimes it lasts 20 years, sometimes it lasts 50 years, right? And that's how you get companies that end up being trillion-dollar companies or you know, $500-600 billion companies when it lasts decades. And their competition is just unable to innovate enough to catch up, right? Because look, AMD's innovating. They have a great chip. Microsoft's using it. Other industry players are buying it. I'm not saying AMD's dead in the water. They have a great chip, but it's not nearly as powerful as Blackwell. And AMD's new chip most likely is going to be benchmarked against the H200 because the MI300 was benchmarked against the H100, and AMD's next chip will sensibly be benchmarked against the H200. They're going to be a generation behind, is the point. And being a generation behind is fine. If you can find a talent pool to somehow accelerate your innovation and catch up, sure, maybe AMD does that. But nobody knows how long that's going to take. And that's the problem here.
If AI is as big as we think it is, and if this is something that will end up, having multiple refresh cycles of these hyperscalers, I would take investing in the number 2. Honestly, I know we're talking about this kind of like it's a zero-sum game, but if this market is really as big as we think it is, second place is going to make a freaking killing. It doesn't matter how far behind they are first place. There will be a place. There's no way this market will be just Nvidia's. Someone is coming. Can it be AMD?
There's a hell of a trade to be made on AMD at some point.
Yes.
I don't know if it's now. I don't know if it's 3 quarters from now. But there will be a hell of a trade to be made on AMD at some point when they become the volume player in this category, which is likely what they're going to end up being.
Lisa Su has proven to not bet against her, but she's also proven in this AI cycle, the company has, not her, that it's not as dominant as maybe we would have thought it was coming into this. So there is space for another player to come in and take that second place spot. I'm not betting on it, but I don't know. That would be my concern with AMD. I'm more comparing like Nvidia to itself and AMD like to Nvidia and get disappointed, than AMD to everyone else. I think Nvidia is the one you can't compare. AMD is the one you kind of got to.
With AMD also, they're coming off quite a big merger with Xilinx. There was quite a big arbitrage trade. Dude. So it also takes time to kind of, sort out these mergers and stuff like that.
It would have been wild. Imagine if Nvidia actually acquired ARM Holdings a couple years ago. ARM Holdings is one that like every single company is running to work with to build their own in-house chips. I could see why they rejected that deal and didn't want it to go through. Nvidia is a beast now. I can't imagine what they would have done with that technology underlying them too. Kind of the thing that's enabling a lot of these companies to build a competitor to them. They own it. I don't know. That would have been quite the company they would have had.
That would have been overpowered. Yeah,
that's the type of thing where you look back on. Okay, like that one. I get why we rejected it. That's.
Let's be real. Nvidia's design prowess was not being valued by NVIDIA. This whole AI cycle is what created Nvidia's boom. I mean, yeah, the stock has gone up a lot since inception. I'm not, taking away credit for the stock's performance prior to the AI boom, because it still did very well. But this massive run up from, back in 2022, the lows, this thing was trading at like $120. It's trading $950 today. That run up was all AI driven. So this is the category they were meant for. I'm not sure that there was vision to that sort of synergy at the time that they were trying to acquire ARM. They didn't. I don't know if they saw this coming. Maybe they did. Maybe Jensen's. I don't know.
I will say Jensen has been talking about AI for a long time. They originally called it the Omniverse, which was kind of like, I guess, their way of doing it and talking about it. But they have been talking about AI for a really long time, and digital twins and stuff like that. And in this whole AI race, I've actually found it quite interesting to go back to, let's say, before November 2022, whenever ChatGPT launched, and find the companies that were talking about AI then. Because, Microsoft, you can invest significantly in OpenAI and catch up a little bit. And maybe Apple is going to be able to catch up here. We'll see. But the companies that I think are going to be on the bleeding edge of this are going to be the ones that have been talking about this and saw it coming. And there are a couple of them. I think Tesla's one that we've talked about on here doesn't get the recognition it does for FSD being an AI technology. And maybe we need some more like a ChatGPT moment for a real life AI use case. We'll see if that happens. But Nvidia is one of them. There's a lot of companies who were talking about AI coming into this, and those are the ones that I've been trying to look at. But speaking of Nvidia went from revenue of 7 billion quarterly up to 22 billion. They're probably going to report 25 billion, 24 billion this next quarter. Listen, you're not disrespecting. I've owned this company for a while, and I didn't get in because of AI. I got in because of some other stuff, which we could talk about. But the way that the AI has changed this company within a year hasn't really been seen before yet. And maybe we'll see some more stuff in the future. But AI changed everything here. Just looking at the revenue, at the price, pretty insane.
Considering we're sitting with the market sitting right at all-time highs headed into this print, that it's setting us up for a very similar thing as we saw last week with the 10-year yield sitting at the trend line headed into CPI, and the market's ripped off of that. we're sitting in the exact same position, really, from an inflection point standpoint. Like, if Nvidia has a monster quarter and is up 20% on earnings, the market is going to rip face. And if it dumps, the market's in a great spot to dump.
Stock talk.
Well. So,
the fact that we dumped 10% off SMCI, like so 2 quarters ago, SMCI, when they said that when they were going to be reporting earnings, they gave some preliminary data. It was strong. This past quarter, they did the same thing. They did not give preliminary data, and people thought, oh, AI weakness, AI that, and Nvidia stock was down 10% the next day. If Nvidia stock's going to be down 10% on something as stupid as that, if we get some real negative numbers here, it's going to be an ugly day.
It'll be bad. A negative number, like if there's like really weak guidance, it'll be bad for the markets, and it'll be bad for all those semis in general. I mean, it's going to be a pretty big unwind if that happens, because I mean, SMCI is a 50-ish billion market cap. That's nothing. Okay, talking about a $50 trillion equity market. $50 billion is chump change. So not only is SMCI not big enough to matter, but they are in the server business, and the server business is not like all this shit we were just talking about innovation and refresh cycles and potential inventory glut and performance advantages. None of that is relevant to the server space. The server space is much easier to commoditize. I'm not saying it is purely commoditized now. There's only really 3 major players with Dell, SMCI, and HPE on the enterprise side. But, it's a space where you can't really have such a discernible competitive advantage that you can defend your market share indefinitely. And so, look, SMCI's stock has performed great, but the importance of SMCI's fundamentals to the broader AI theme is far less important than NVIDIA's. NVIDIA is the cue for the rest of the market.
NVIDIA certainly is the cue. All right, we've been going for a while here. I'm good to keep this conversation going. I don't know if there's any other points there, but we'll have time for it tomorrow. But I always like to do these things. Give me the one word. Give me the kind of green or red. Omar, yeah, I see you also got that space coming up. You should pin that up in the nest above. But what's up?
Yeah, so, I recently saw Jensen speak at Stripe Sessions in San Francisco, and he told a pretty incredible story about CUDA. And I just thought it'd be fun to share. So he said, we had this gaming market, obviously, that we were serving. And I had this idea that, hey, nobody has really thought about using this thing for computation. And we could do this advanced scientific computation. And he had the idea for CUDA, and he launched it. And this was about 10 years ago, and it was just a big flop. There was no product for it, really. So they kind of built this technology, and there was no real applications for it. They were thinking, okay, maybe scientists or scientific computing or something
I don't know,
like
man.
that. But really,
2 years is a long time, I agree. Who knows if it's ever coming.
It made the chips much more expensive to have this capability to do this scientific computing. So the cost of the chips went up, the gaming cards, and gamers weren't actually getting anything useful out of it. So they were pissed. They actually lost some market share. It was a big disaster for the company. They lost a ton of money. And he just kind of continued with it for years. And it wasn't really until a decade later that, just totally out of the blue, you had AlexNet in 2012. And Alex Krzyzewski, Ilya Sutskever, and Jeffrey Hinton showed that, you could train one of these models on an Nvidia GPU, where they actually used 2 GPUs. And then, boom, there was, obviously this huge explosion a decade later in sort of building these AI supercomputers 10 years after AlexNet. And it's just kind of incredible how in business, he kind of just had this vision. He put it into the product, and for 10 years, nothing happened. And then you kind of saw that moment where AlexNet hits the market, and there's kind of that spark. And then it's another 10 years after that it actually led to this AI boom. So I think it's just kind of just an incredible story about long-term, thinking, right? Which is really in short supply in many businesses, and not in Jensen's case, I guess, here.
Omar, you got me thinking there. You were kind of talking about AlexNet and the history of Ilya Sutskever and stuff. What's the kind of history of Sam Altman? I don't know what he was doing too much before OpenAI. I know he was at Y Combinator, but I don't know much else.
So, Sam Altman was the first, in the first batch at Y Combinator. So Y Combinator was the legendary startup accelerator. Paul Graham was an internet entrepreneur. He sold his company to Yahoo via web. It became Yahoo Store. And so I think he got like $50 million or some relatively small amount. And he said, we're going to help founders start companies. And we're going to, just have them come in and we're going to make a small investment, take, 7% of their company, give them like $100K and enough to get them sort of ramen profitable and start their own company. And, we've seen Reddit, Airbnb, all kinds of companies come out of Y Combinator now. Some join Y Combinator later. So it's really become this legendary accelerator. And Sam Altman was there in the first class. It was Paul Graham and Jessica Livingston really together who founded it and helped all of these founders become successful, teach them about legal business, finding product market fit, help them refine their idea, and obviously find success. And so Sam Altman was in that class when Paul Graham decided to retire and go back to England just to raise his kids and spend time with them. He put Sam Altman in charge of Y Combinator. So Sam Altman was in charge of Y Combinator, obviously an incredibly sort of influential position in Silicon Valley. He'd actually started a company called Looped. He was actually at WWDC one year. You can see him with, two collars, two polo shirts with two collars at WWDC unveiling Looped. So Looped failed as a business, but he got put in charge of Y Combinator. And then at one point while he was in charge of Y Combinator, he was talking with Elon Musk and they decided to start OpenAI. So they poached Ilya Sutskever, who, obviously he worked on AlexNet. He's kind of, one of the founding sort of people who made deep learning what it is. So he was working for Google at the Google Brain Project, and they managed to poach him and convince him to start a company. And they got Andre Karpathy and a lot of other sort of just incredible people who were, just, pioneers in the field. And they got them together, a pretty small team, and that was OpenAI. Then, OpenAI started looking so promising that eventually Sam Altman left Y Combinator. Now Gary Tran is in charge of Y Combinator. He's doing a great job, in my opinion. Great advocate for the city of San Francisco. And Sam went to go, be in charge of OpenAI full time. And the rest is history.
Omar giving out here some lessons. I would subscribe to Storytime with Omar. Give me a different conversation like that once a week, little 20-30 minute talk. I would subscribe. That was a good one.
Silicon Valley has some crazy stories if you want to get into it, There like some crazy stuff goes on in the business world here.
Oh, I'm sure, and I can't even imagine half of it. But no, I think that would be actually would be a good spaces to do. Could be a fun one. Awesome. I think this has been a good chat. I know I don't want to like beat Nvidia into a horse or whatever. Okay, I'm just gonna shut up. I don't want to talk about it a bunch, and then we talk about it more tomorrow. The analogy escaped me there, but yeah, no, I think this was a fantastic conversation, a fantastic spaces. Stock Talk, Omar. Any extra points you want to get in there around Nvidia, or any other talking points? I mean, I have nowhere to go.
No, I think we pretty much touched on everything. We're going to be talking about it so much tomorrow, too, so might as well save some for that.
All right, here we go. Where I'm going to ask it, there is no cop-out answers acceptable. Does Nvidia open trading on Thursday higher, lower, or at the exact same price than it closed at trading on Wednesday? We know we don't know. We know we're just playing out there. I'm twisting your arm, Stock Talk. You got to give an answer. I'll say higher.
Repeat the question.
Does Nvidia open trading on Thursday following its earnings higher, lower, or at the same price that it closed trading before its earnings?
I'm going to say higher.
All right, I said higher. Omar?
Well, my gut tells me higher, but then my second order thinking tells me that when everyone thinks it's going to go higher, it usually has a better chance of going lower.
All right, we'll say higher for the culture. Noah, what do you want to say? Higher, lower, unchanged?
Yeah, I think just flip a coin for the earnings.
Nope, unacceptable. Give an answer.
No, but seriously, I think, if you're trading options, you can just flip a coin. But I think listen to the call, listen to what they're saying. That's the key information.
Unacceptable cop-out answer. Not cop-out answers are not allowed, Noah.
Just a waste of time. I think just don't trade the options. Just, if you're investing in a company, invest for the long term. Don't try, just play a binary event.
I agree completely, but I want to let you know this space will not close until you either say the words higher, lower, or unchanged. One of them.
Look, I think Jensen's.
All right. He's not going anywhere. I'll stop trying. There we go. Higher. Cool. Good. It took a lot, but we got there. Again, I don't bet on earnings. I'm just holding it. We're just playing a little game here. Wolf. Higher, lower, unchanged. Great way to end it, guys. All right. That was the spaces. We're going to be live for Nvidia earnings tomorrow. Shout out to that. I'm super excited for it. Omar will be up there. Stock Talk will be up there. We're going to be live on Gavin's link. Let's hope he doesn't kick the Stocks on Spaces account. Everyone, fold your arms. Do whatever you got to do. Prayers up in the chat. But tomorrow, it's the Super Bowl for us stock market nerds. It happens 4 times a year, and I am looking forward to it. As Noah was trying to get out there and I was berating him with give me an answer, I don't bet on earnings. I don't gamble around it. I own some of these stocks long term and I love to get more information, but I don't buy options into earnings. There's different trading strategies for the increased volatility running up into the earnings, and also strategies for right after the numbers come out, kind of reacting to that. But I've really not found anyone that's able to sustainably bet on these earnings. This kind of thing I see is those IV crush plays, or kind of when the implied move and the historic moves are out of whack. But 99% of the time, the people who bet on earnings tend to lose. There are some smart people who can set strategies up on the right companies to do some good stuff. But if you're asking, do I just buy a call? That's probably not you. So I avoid gambling on these earnings. But yeah, we have those Nvidia numbers coming out. We're going to learn a lot tomorrow. I'm excited for it. We're going to be live on Spaces tomorrow, so if you're following pretty much anyone up here, you'll get some Nvidia live talk, live earnings up on the top of your screen tomorrow. Follow the speakers. Follow the host of the space if you enjoy live free conversations. We're live every single Monday through Thursday, 3 to 5 p.m. Eastern at least. Obviously, we go over, given it's 5:50 right now, and we're still here live. But I think that's all going to be all from us. I appreciate everyone, and we will catch you all tomorrow. Nvidia earnings. Get some good rest. Put the spoon under your pillow. Whatever you got to do for good luck. Hope everyone has a good one. All right, now I have to call Wolf to make sure he closes the space. Oop, he closed it. Nope. Okay, good. All right, chat. I'm going to close this down as well. Good day. Good day in the market. I appreciate you all being here. Nick, I appreciate you joining and using me as a part of your journey and starting out the stock market. Ollie, Goose, Emperador, Paul was in here. Let me scroll back up. Dan DeMan. I like the username. Jim. Who else? Red Bull Max. We have my guy, Bradley Reed. Gregory was in here. Gavin even said hi. Mustaba, JG. I really appreciate each and every single one of you guys. I don't know. I just love making content and doing this stuff and getting information out there and sharing all this stuff with you. And you guys really kind of make it possible for this to become a job. And the people who in here are the real supporters. So I just want to say I'm going to keep working as hard as I can to get you information, increase the value that I can provide, do it for free, and find different ways that I can kind of help you all in your journeys as well. Because, listen, I enjoy helping people, and I think a lot of people do as well. But there's an underlying thing here where if I want to be successful, the way I see myself doing that is helping the most amount of people. And I'll take the compliments, I'll take whatever, but that is truly what the thinking is here. I want to be successful. And the way I do that in a sustainable way is by creating a business that can sustain decades, not weeks and days, not doing sketchy shit. And just really building trust, which, you take years to build and it takes seconds and days to get rid of. So that's also really important to me, and just helping people. So, yeah, I don't know. There's no saints out there. Well, there are maybe, but there's no one who does everything just to the goodness of the heart. There's always these ulterior motivations, and my motivation here is, hey, how can I be the most successful? It is to help people be successful. If I can create millionaires, if I can create hundreds of millionaires by investing early and doing this and doing that, I know in full confidence that I will end up being successful. So that's kind of my thinking behind this. I'm here for the long term. I appreciate everyone who's in this chat who are really enabling me to do that and to kind of build this thing and never really have to, like, I don't know, go against my morals, go against this or that and do sketchy stuff because I'm not in an area where I can feel safe and secure and everything like that. So I'm rambling here a little bit at the end. Point being, I appreciate you guys. I hope you appreciate what I'm doing. I want to try and deliver as much value as I can. Please let me know more ways that I can do that. And yeah, we'll be back for those Nvidia earnings tomorrow. It should be a good one. I think this should end up being a pretty active live stream coming tomorrow. We do have Paul. If you're in here, you want to guess the watch hours? Paul, I'll give you a minute or two because I haven't heard you talk in a while. Ollie, if you want to guess the hours as well. We were live for 2.5 hours, and yeah, I won't give you more information than that. I want to see what your guess is. You guys tend to guess a little higher than it actually is. Give it a minute, and then I'll close this out. See if we get any guesses there. Nick, if you want to guess how many watch hours we got, too. I don't know if you look at that normally. $35. Close, Ollie. 31.2. 31.2 watch hours. So it was good. A good little chill space. I wasn't even know if I was going to go live, but I decided to do it. Why not? And I'm happy I did. All right, people. One more time. Appreciate each and every single one of you. I'm looking forward to doing this for the rest of my life, hopefully. So we'll see. But, bet yeah, you're all great. I hope you guys have a good afternoon. Good night. Get ready for those Nvidia earnings tomorrow. Fuck it, we'll end it with this. Remember, hey, say something nice to someone. Go off this space and say something nice to someone, team. But I appreciate you all. I'll catch you all tomorrow. Enjoy the day. And end stream.